Good morning, good afternoon, and good evening, everyone, wherever you are in the world. Welcome to the Brooks Trading Room. Today is July 17, and it is Monday. My name is Tim Stout, and I'll be taking you through the price action this morning. As I said, Monday, it is summertime. It is also earnings season. So this week, we're going to have some earnings from banks, I think some techs. That might cause, especially, of course, some price action moves on at market close. So like in the pre-action, if some of these companies release their numbers before market open and some of these companies release their numbers after market open. So some movement sometimes there, especially if big tech releases some of its numbers. I believe it's only 7 stocks now that make up about half of the Nasdaq in terms of market cap. So if those 7 move simultaneously at the same time when they all release earnings, then Nasdaq can get a good hit up or down, right? But in general, it is in the mid of the summer, so price action is sometimes a little bit slower. There is, of course, still inflation and interest things at play with the Fed, so some of those announcements have been moving the market. I personally haven't looked at any chart in the last couple of weeks, so I am just going to go through the different time frames, daily, monthly, and weekly, and I'll be looking at where we are with a fresh mind and a fresh look, and then we'll be ready for the open in half an hour. So yesterday was basically a consolidation down after the move up from the day before, so Thursday and Friday. We're sort of at a little bit higher on Friday than we closed on Thursday. That was to be expected probably because weeks in trading ranges don't typically close at their highest points. So this week closed a little bit lower. High point here 45.60 and then 45.36 close. With a day like this, you expect that the next day, so that the Monday will open below Friday. We're currently trading at 45.33, so we're at Friday's low. So we're probably going to see Friday's low at or around the open. But let's take a look at the more higher time frames. So I'll start at the monthly and then work my way at weekly, daily. Ultimately, we'll come to the 60-minute chart and then we'll look at yesterday. So monthly chart, we are in July. We're sort of in the middle. Let's see. Yeah, so we have a good 10, even 11 trading days left. So anything can happen. We're currently looking at a bull bar with the tail below as a follow through from June. But this could very well close below the August high from 2022 and form a first failed breakout. So June tried to be a good breakout, but it barely closed far above August. So July is trying to create follow-through at the moment. It's doing a good job, but with 11 trading days to go, we could even close below June or far above, for example, April from 2022. So good follow-through so far, but let's see with the gaps here how far July can still go open. We have this breakout still above the channel. We have the formation of a major trend reversal. We're going sideways roughly between the all-time high and 3600. There's gaps here to the downside that we're probably going to close, and we want to see if we can get above April 2022 and then maybe even the close of December 4881 in the next few months. Bulls are hopeful that there's going to be a strong follow-through, but it's a trading range, and trading range are disappointing, and so probably July will look much more disappointing for the bulls than June was. So June was giving a lot of bulls hope. July is probably going to be an end to that hope and be disappointing. Disappointing as in this could be a doji, it could even be a bear bar, or it could be a big bar, but closing way below its high. Weekly, so we are now far from last year's low. We are coming to the 46.39, I said last time that I was in this room that we're probably going to close the gap to the week 16 2022 low, and we closed that gap last week, and so that was 45.0575. Last week closed as a strong bull bar, but we have strong bull bar, inside bear bar, strong bull bar, inside bear bar, and now another strong bull bar. So you can argue that these three weekly bull bars are a wedge. We are also above the high of August, and we failed. So we broke above the high the first time, we failed. We broke above the high the second time, we failed. And now we're trying to break above that high a third time. And so what's going to happen this week? Are we going to continue up and break this high 46.21, or will we go below last week's low and have the third time a failed attempt to break above the August high, and will we come down to probably the 42.66 area? But we haven't touched the moving average in a long time. We're slightly parabolic, and so there is room for the bears to take us down to that 42.6650 area. But bears have now had 2 times to sell below a bear bar on the weekly chart, and both attempts have failed and actually reversed up to above the high of that bar. So bears are failing their attempts to have a double top at the August high and then reverse down. So it's still undecided. This week we'll probably give more insight into, are we going to continue up to the 4800 area, or are we going to go down, sideways to down to the 42.66 area and back to that moving average. On the daily chart, so we had a good bull run up, so to see, in the last couple of weeks. So let me just see if that is a measured move. Yep, so that reached the measured move, that pulled down back to the channel line, pulled up a little bit, and it's now a broader channel. And you can also argue that this is now the channel. And so we're sort of in that bull trend. It's also a breakout from this range, and so you could argue a measured move 4250 to 3900. So that's about 350. So that would be 4600 measured move. And we have a two-legged pullback, a new run, attempt of a double top. Bears failed to continue. That inside bar was probably a good signal to exit shorts and enter longs. Very good follow through in, this was probably then Wednesday. So this was probably Friday, Monday, Tuesday, Wednesday. So good follow through there. First failed attempt on the 14th. And so today we already dipped overnight. We already dipped below Friday's low. We're reversing up from there. This was by the close until the 13th. The 13th closed at 43.50. And so there's a good chance that today, after by the close ends, that today will hit 43.50, so that bulls can exit there. So that is daily. So let's put that line on the chart already, 43.50, because it's important. We'll put that here. That is by the close, last close. Let me name it like that for now and do it like that. So we have that line on there. So how does buy the close work? Well, buy the close works by, if you're in a buy the close rally, so 1, 2, 3, 3 bull bars, 1 closing on its high, this is buy the close. So you buy this close, the next bar is a bull bar, you can buy that close or just hold. The next bar is not a strong bull bar, so you don't buy that close, but this is a strong bull bar, so you can buy that close, or you can just hold until it's no longer buy the close. And then when price comes back to the last working by the close bar, that's where bulls will exit. And so here you have by the close. The last close of a by the close bull bar was 45.4350. So if you come back there, some by the close bulls will exit their longs there. On the daily chart, that's typically a little bit more difficult to see than on the 5-minute chart. because there's so much other patterns working on the daily chart as well. But on the 5-minute chart, you can clearly see it that very often that is to the tick, reaching a target like that. So 60-minute chart, what happened overnight? Well, you got a good rally here from the 9th of July. You had a higher low, lower low major trend reversal from here. So that started that bull trend that broke out to the upside there and then set up what probably will become a lag in a trading range, right? So directly from here, you have a little bit of a channel here, maybe here, broke out of the channel, and we're now going sideways. We can go sideways to down to all the way here, 4,500, and the upside right now is 4,560. So also sideways from here to sort of here, expecting a little bit up and expecting a little bit down to that region. So we're below the moving average right now on the 60-minute chart, Globex. We reached it back from below, and so we sold off from below the moving average, and in the last couple of hours we're sort of going sideways. So I don't expect an immediate trend up or down. I do expect a little bit more up during the open, maybe 45.40, 45.45 area, but we'll probably also go below Friday's low. Then taking a look at yesterday or Friday, better said. So you had this run up. Thursday opened on its low, closed higher. You had a big bull bar, which was the low of the day, and then we had different tests of Wednesday's high. And so you're expecting that this is a range that will get a measured move up because of it continuously testing back to that high. So 45.50.5 was your target, and we reached that on the same day. Okay? So if I see repeatedly here price testing a certain level, then I'm assuming that that level here, if I just look to the left, I can see it's Thursday's high. So Thursday was a trading range. This is a breakout above the trading range, a double test of the high of the trading range, and then a measured move up. So if I'm seeing that, I'm taking that range from, in this case, Wednesday, and I measure up 45.50.50. You can see towards the end of the day, we reached exactly that level. So it's a trading range breakout, and it doubles the range. What traders are expecting is that we're coming back and potentially going to hit that high, the breakout point from Wednesday. So the breakout point from Wednesday was 45.2375, and we might be coming all the way down to test that level once again. Then you have a trading range, you have a breakout above the trading range, you have a parabolic wedge. You can see that this line is parabolic. You can see the moving average getting steeper and steeper. There is not a clear channel, so we continue to break above the channel here and then here, and then 75 is a parabolic, and then the open of Friday is even more steep. So now you have a parabolic wedge that gets steeper and steeper. That is not sustainable. That is climactic and it's parabolic wedge. So you have to expect on a higher time frame 2 legs down from this parabolic wedge. Well, 2 legs down you ultimately got, because this is leg 1 and then sort of this is leg 2. On the open, bar 1 broke above Thursday's high, and bar 2 was a good follow through, but you had to be careful because bar 2 was exactly here 1 hour. So 1 hour, what do I mean with 1 hour? Well, if you have a big bull bar here, 2 things can happen. This can go a measured move up the size of the bar, or we can go below the bar. The 1 hour target, so once your risk, is 1 tick below that bar to the close of that bar, upward. Okay, so 1 tick below to the close to upwards is, in this case, 45.56.25. That would be 1 hour on 75. In this case, you didn't get it because we went below that bar, but I can do the same here on bar 1. So at the open, I'm looking to see Do bulls make money? Do bears make money? Well, how can you make money on bar 1? Well, bears will sell it, hoping that we go below it, and then hoping that we get a measured move down. So they have 2-to-1 risk reward if they sell the bar 1 close. So they have a big reward, must mean that they have low probability. And buy the close bulls will buy the close, and they want at least a measured move up from 1 tick below bar 1 to the close of bar 1. We draw it this way, and that would be 45, 56, 25. And we got 1 tick more so that every bull could be filled on their exit there. So if you look at it and you say, okay, got 2 big bull bars, do we get a trend from the open? I think with the context here of Thursday, no. I think with the context here of these bulls actually exiting there instead of entering there, that the next bar is not going to be a bull bar, it's going to be a bear bar. Right? Bar 2 then fails because we go below bar 2. And at that point, we're not making higher highs and higher lows anymore on the small time frame. So expect a trading range open rather than a bull trend from the open. So bar 2 fails, but there's bulls there trying to exit break even. Above bar 3, there's bears trying to exit break even. And so everybody's trying to exit break even, or they're trying to scalp. And you're getting a scalp open. So at that point, better to let it go for about 6 to 12 bars and see if you can find direction there. You got a new low, you got a new high, you got a new high, you got a new low. At this point, I think bar 12 was a good sell. We closed below 8, we closed below 9. This whole 15-minute bar, so if you think about what a 50-minute chart would look like on this time frame, the whole 15-minute bar was broken by bar 12. So bar 12 was a good sell. You're hoping for a measured move, you're hoping for a breakout down. You get bar 15 here, which is an inside bar. That is disappointment. Bar 13 was a pullback on the breakout. And so you expect that when we continue to move down from the pullback, that you get a measured move down. You got exactly that to the tick on the bar 16 low. And then bar 17 reverses up so strongly that if you still hold short, you have to exit there or 1 tick above it, or 2 ticks above it, so that when it goes 1 tick above 16, that you're out. And then bar 17, buy the close to sort of halfway of that move, so that the bulls that were stuck here bought lower could escape. And so if they bought the bar 10 close and they buy the bar 16 close, they're out break even. And that is the point where bulls are exiting. We also have a little bit of a wedge top here. So 1 push, 2 pushes, 3 pushes, a breakout above a developing channel. That is probably going to fail on a trading range day. Why is it a trading range day? Because we already have gone up and down. This is not a strong trend, so you have to assume somewhere in here after bar 12 to 16, you have to assume that the day is a trading range day, and that you're much more likely to look for a long here or here than for a short. So once you get a 1-to-1 on bar 17, so to the 450-50, 4553 area, that's where you got to take profits. You can take profits at that close when it's disappointing. You can take profits a tick below 26, and that frees your mind up to start looking for potentially shorts. I think below 27 might be too early, but below 31, when the bulls failed for the second time, that's definitely a good short here. So 31 close, below 31, somewhere in here, 31, 30, 32, selling there, knowing that we're going to get an extension to the downside rather than to the upside, was good selling. So here as well, maybe second entry short, close of 59, all of this. You could even sell here when the double bottom fails, but you would have to sell more. It's also later in the day here, but all of the shorts here around the moving average, even this one here, the big 66, all of the shorts close to the moving average were really good sells on Friday. All right, for the people that are new or have not been in a session with Tim Stowe, The chart here, this is yesterday's high and yesterday's low. This is the 20 period moving average, exponential moving average. This is the 20 period moving average on the 60-minute chart. So I have the 60-minute chart here. This moving average is this moving average. Bar numbers are, of course, the bar numbers that you know. And here on the left top, we have the 60-minute chart that I'll be looking at quite regularly. And we have the 50-minute chart that I'll really be looking at quite regularly. So the 50-minute chart gives us a clear direction at the beginning. It gives us an indication of who's stuck, bears or bulls. And so I'm very, very frequently looking at least the 50-minute chart and the 60. And that's why I also have the 50-minute chart here on a separate tab. And then I have the ETH chart, which is the Globex session, so overnight session. You can see the gray area here is Globex and the white colored background area is the regular session. And so if we look at what's happening overnight, you can already see mostly sideways, a little bit bullish, a little bit bearish, but mostly overall we've gone sideways. And so to be expected on the open is probably sideways and a trading range open as well. Then I have a mirror chart. So this is the chart upside down. Everything that here is a bull bar is in reality a bear bar and vice versa. You can see that the y-axis is negative. And so everything that is a bullish setup here is actually a bearish setup on the chart. And this helps me sometimes to look at things from a different perspective. If I want to validate if something is a valid short, then I look at this chart, and if it's a valid long on this side, on this chart, it might be a good short on a regular chart. So that I have, of course, on Globex and on RTH, and then we have the charts that we just went through. So that's a little index of the charts that we're using. Then, to finalize our homework, let us put the Globex high and Globex low on the charts. 45.34.50 and no 45.28 and 45.39.25. And why do I do that? Because there's a high chance that one of these will be broken during the regular session. In about 80 to 90% of the cases, that is the case. And so it helps you sometimes to hang on to a trade a little longer because you're ultimately waiting for it to break the Globex high and the Globex low. If the range is small, like today, there's an increased chance that we're going to break both the Globex high and the Globex low. But we'll have to see. And I had a target here, so we have the 45.2375. There's a gap here. There's a gap here as well. There's a gap here as well. But there's a gap here that I'm thinking we're going to close. So the high here is 45.2375. And because I'm thinking that we're going to close that high, I want to have it on my chart. Okay, so that is the daily gap through Thursday, I think, Friday, whatever. Doesn't matter. I think it's a magnet, and I think we want to get there, so that's why I have it. So I got that. We are trading at around 45.34, so roughly in this area. And so what I'm expecting, again, trading range open. I think we're going to close the gap to the 58 low and probably go to above the 59 high, so in this area. We might go higher and test this gap, so the 11 high from Friday. But I'm also thinking that we're going to go lower and close the gap to 45.2375 because that was the breakout point from the measured move up. And often prices in trading ranges revert back after a measured move up. They revert back to the breakout point. That's why I have the daily gap there. And we might go even a little bit lower to this ledge here that we broke out of, but that we might need to test the high again. So we'll see that when we open, but I think trading range open, I think from where we are now, 45, 35, 50, both a little higher and a little lower is to be expected. But we'll see, of course, what happens at the open. All right, so we have about 3 minutes left before we open. That is a good time to refill our coffee and some water, and then I'll be right back when the market opens. All right, back at market open. So we open within Friday's range, and we clear, I think this is Globex high. We clear with Globex high. I think we're going a little bit higher, as said, to the low of 58. But this is probably not going to be the low of the day. You are in a trading range context. You're in the big up, big down. You're not in the continuation of a bull trend. You're in a consolidation. And so chances of bar one being the low of the day are about 20 to 25%. But in this typical context, that is much lower. So I'm guessing that somewhere today we're going to go below bar one. But of course, we might go up 40 more points before we do that. I'm just saying in this particular context, it makes sense that we're going to below Friday's low, or at least to below bar one. Now, Friday closed, if you want, as a range between, so if this was a range, right, so 64, 65, and then 68, the double bottom, we failed once, twice to break through the double bottom and have a measured move down. So the range, instead of doubled, got extended a little bit, but we're still in that range. So you can still see this range as a range that needs to double to the upside, or it needs to double to the downside, and then you get here 45.17. A different way to look at the range is to say, well, this is the range, and we now fail to break above the range here, and then you expect that this is 45.19, 50, or 45.54. So sellers above Globex high, sellers above 79 from Friday, 71 from Friday. But still, only bulls have entered the market, so there's only no buy orders until here. This is the first point where bears are making a little bit of money. So I'm looking to see what's happening. Most of the price action is taking place at the top of this bar, so it's still more bullish than bearish, but there's no immediate hurry. Oh, I had a DAX trade. Gotcha. We can have a look at the bar in relation to the Globex. So you see that we're breaking above the Globex range. The Globex range was small, so we're probably expected to double. Well, if we expected to double, that would go to 45.50, $50 as well. But we only have one bar that closes above the range. We need more bullish price action above the range for that to happen. So let's just wait, because we still have only the first breakout above this whole bear channel. Okay. So if we take the bear channel from Friday, we draw it down, we just touch that trend line. And so bears are waiting there to sell. We are still below the 66 high by 2 ticks. So we could still be trading within this channel. And this is disappointing, of course, for bulls who wanted to have a big bull breakout. Let's see the follow through. So what you do here, well, you just wait. Usually in an open like this, you wait about 6 bars to get more clarity and direction, sometimes 10. Environments like that, like this, set up a swing probably around bar 12 to 12, 14, 16, 18. if you're so in the range of the previous day, you want to see a breakout and follow through, or you want to see a failed breakout and a swing the other direction, and you're still fairly within the range of Friday, so no swing to be found, just scalps only. And that is what traders are doing at the moment, scalping. So will we get below bar 1? I think we will, probably already in this bar, but otherwise later in the day. What do bulls want? Well, if bulls by the close of this bar put their stop one tick below, they want 45.42, and 2 times risk, they want 45.45. Okay. I'm looking at Thursday to see where the gaps are, but it looks like Thursday did a wonderful job on closing all of the gaps as it went up. Right? So it went up in trading range fashion, which is a small pullback bull trend. A small pullback bull trends close all of the gaps that they leave behind. So that's why bar 81 actually closed here, because 66 high and 68 low left a gap that needed to be closed at the close of the day. This gap got exactly closed here by bar 61, and this gap was also closed. So I was looking to see if there were any gaps, because then that might be a magnet, but it seems that the only gap that was left was the gaps to this area. So bulls got one-time risk reward based on buying bar 1 close. So just like Friday, when they bought the close, they got one-time risk reward on buying the close of bar 1. They did the same today, and they just hit their 1R. And they'll probably be exiting there instead of holding. So that gives us more indication that that's more of a scalping type open than a swing type bull trend from the open type open, because you can see that bulls are not holding on to their long, they're exiting their long instead of going for more. Now, if you look at average ranges, the average range is about, what is it on the, it's about 32 points per day at the moment. And that means that a trading range day is typically smaller than the average range, and a trend day is typically larger than the average range. That's how you get the average range, right? So trend days tend to extend the range, and trading ranges tend to compress the range. So if you know that today is probably going to be a trading range day, you expect the range to be 32, 33 points or lower. So we can already say that the range is going to be maybe to here maximum, if this would be the high of the day, and 66 area if this would be the low of the day. Okay. So those would be the approximate, unless we break out into a trend. If we break out into a trend, we're going to extend those ranges, but this is to be the spectrum, 45.66 to 45.10 is to be the spectrum of action for today. And so that nicely fits within our Thursday gap. That nicely fits to Friday high. Last week was a bull bar, and so bulls will try to get above the bull bar. So trying to get above Friday's high. But it's the question if that's going to work on Monday directly with this bearishness. Bar 2 closed within bar 1. So bar 1 bulls took profit at 1 hour of bar 1. And they didn't hold, right? So bar 2 closed lower than the target. It's an inside bar, so there's probably sellers around bar 2 high and higher. There's probably buyers around the bar 2 low and lower, scaling and scalping. I think it's still best to wait at least till we have a nice looking 15-minute bar. So that would be on the next bar, and then see what we can get on the 30-minute bar and the 45-minute bar. Right now, I still think that we're going to go below bar 1. And I still think that we can hit the daily gap to Thursday at some point today. It's a mini triangle, okay? So lower highs, higher lows. So it's a mini triangle. Range is going to double for sure, but it could double by going a measured move up, it could double by going a measured move down, or it can of course double by going a little bit above and a little bit below. The bulls from Friday will argue that they want a measured move the size of this bar. So that was Friday's low to 39.75. And that brings us to 48.75. But the follow through on their bull bar was quite weak. And so they're hoping that this could be the follow through and then measured move from the pullback to the 58 low, and then ultimately to the 59 high and the 57 close from Friday. Now, is it by the close? If this would be a big bull bar, I would hesitate because of this being an inside bar. So by the close is much better if it is consecutive closes that close higher than each other, like 48, 49, 50 from Friday. Bar 2 closing inside is for me already a big no because it represents trading range behavior, and so more sellers in this area than buyers. I think this is a context for selling somewhere at the 2 high and higher instead of buying here. There's also no urgency because we barely are moving. It's in the middle of summer. It's typical middle of summer type trading. Lack of urgency, small bars at the open, waiting for breakouts, and context of the trading range. Scalpers below 2 only got, until now, only got 1 point. That's how small the range is. Bears now want a new low and at least 45, 35, so that they get 1 R on selling bar 3 and can show that they're making money as well. 50-minute bar, bull bar with a very long tail, closed below the moving average, like so many of the past bars. So bulls not majorly strong, probably going lower. But bears have not shown themselves today yet. Right? They've only been scalping here at this high, and at this high. Bulls have scalped the 1 close, they scalped the 2 low. Bears trying to break the bar 1 low. They're probably going to succeed, but it takes a lot of time. And so that shows already a lack of strength from the bears. So there's not really bullish strength, there's not really bearish strength. Result is sideways in the trading range until we can fail one side and either, so if we break the low, we can either go back up and set double range that way, or we can break the low and of course go lower, and vice versa. So there's a bullish success breakout and there's a bullish failed breakout, and then a bearish successful breakout and a bearish failed breakout. Right? And it's still a very small range, so difficult to trade in a 6-7 point range. Good follow through for the bears, but why not a breakout below bar 1 immediately? Okay? So yes, 2 bear bars, but 4 closed within 3 and 4 didn't break the 1 low. So bears, although it's a bear follow through bar, they're actually disappointed by 4. They'll hold because it's a bear bar. They'll be ready to scale in above 4 to then get out break even if they sold the 3 close. But for now, they'll hold until we go above 4. Why above 4? Because it's a 2-legged move, right? So 3 went down, then 3 went up on 4, and it went down. So you have 2 legs down. The bulls will see this as 2 legs up, and now 2 legs down, and so they want continuation. The bears are holding to the high of 4, and only at the high of 4 they'll decide that they want to get out, either break even or with a loss. So on the third attempt, we broke that lower high from the bears. So bears need 39.75 to get out break even, as they got now. And so the market is back into break even for both bulls and bears, right? So we're still waiting for a breakout. It's still a triangle. So the triangle is coming down here. The triangle is coming up here. And we're going to get a breakout. I guess well, many times, especially on a Monday, when you haven't been trading for Saturday and Sunday, and you have been thinking probably about trading all weekend, it's very easy to be too eager to trade. And so it's Monday, you're pumped up, you're ready to go, you want to buy, you want to sell, and then this happens, right? So the best thing to do is stay calm, wait for the setup that will come, but the risk here is to take a trade that's not there. So you're seeing something that looks bullish, you jump the gun, only to see bars 3 and 4. You then jump the gun and think, no, I want to go short, and then you jump the gun there, and now you're 10 points in the hole while the market has only moved 4. So it's very dangerous to take trades that don't exist just because you are addicted to the rush and the adrenaline and dopamine that trading can give you. Especially on Mondays, watch out for that feeling of wanting to trade and wanting to go in there. There's no trade yet, right? There's only a couple of scalps that you need to be very experienced to be able to take, but there hasn't been a trade yet, and maybe there's not going to come one for the next hour or so. But you can't make up a trade just because you've been sitting on the couch looking at past charts for 2 days. Now you just want to get into the market. It is probably the number one mistake to be 10, 20 points down in the first 10 bars and then having to work the rest of the day trying to get out of your hole, or in some cases, making your hole even deeper. So take that, be mentally under control of your emotions and your eagerness, because hastiness will only lead to losing trades. So bar 5, we hit the bear stop. Bulls will want to get now a move up, but the bad news is that the bears have been able to get out break even by that bar 6 low. And so what you want is that bears are stuck and that the bulls force them into taking a loss. Instead, they sold more at the 4 high and got out perfectly break even. So there's not a bear trap or a immediate momentum to the upside, but the bears have exited, so there is room for the bulls to take over the market. But I don't see any immediate bullishness, but I'm curious to see if the bears can now get to the high of the day, because 1R on bar 5 is exactly the high of the day here at 45.4375. So I'm curious to see if they can get there. The 50-minute chart is not looking great for the bulls. With 1 minute to go, we're still an inside bar. So if we break above it, bears will scale in there here at the 45.48 area at the high of the day, and we will come back to the 2 high. If the third 50-minute bar breaks higher, then we will come back to that 2 high. It's also bad news for the bears because there will be buyers below bar 2 and lower scaling in to get back to the 2 low. So having bar 2 on the 50-minute chart being an inside bar is bad news basically for both. We still have 35 seconds, but we need to overcome, we need to overcome 2 points. Can be done. Good follow through on bar 6. We're now also breaking the 3 high. Some bears may have had their stop at the 3 high instead of at the 4 high. So we're forcing more and more bears out of the market, but we're still within the context of this trading range. Can we force out a couple of more bears? We need to overcome the 66 high from Friday. That is a strong lower high. That is a strong lower high. It's looking good for bulls now, but can we get to a new high of the day? Get to a new high of the day. There will be sellers there, but for how much will they sell? So I think they will only sell for maybe 1 or 2 points. All right, so we reached that point. That is 1 hour on bar 5. So bulls are making money and the bears haven't selling closes. Bulls are making money buying closes. Bears are not making money selling closes. So it's more bullish than bearish. We're breaking now that 66 high as well. 2 times risk on bar 1, that is that line. So first time the sellers were here was when we sort of hit that trend line. So we sold from the trend line. Now we're trying to break out. This will probably still fail. So we'll still probably come down to the 3 high, and we might even set a new low of day. This could be a bull trap, especially if we don't hit this line. I think we're going to try to hit it, but if we fail continuously to hit it, then we're going to go below bar 1. Okay, we got there. That's good. So if you bought the bar 1 close, you got 1 time risk reward during bar 2. You now have 2 times risk reward there on 45. And that is similar to what happened on Friday. When you bought the close, you got 1 time risk reward on bar 2. You got 2 times risk reward on bar 10. But after that, the market went down. So we need to watch out for a repeat of the Friday open happening now, that we actually go below bar 5 and reverse down for a measured move this rally. So that could trigger us to 45.2975. It's bullish, yes, but they're at the top of multiple trading ranges. The trading range of today, the trading range with the 66 high, and we're getting close to the high of the trading range with the 58 high. So I would still be careful to buy. There's only 1 close above the high of the day, and there's only 1 close below above this range. So I guess we still need more bullishness for me to wanting to take a swing long. I'm actually more curious to see if this could be a double top and then a short than to see if this is a strong move to the upside. Pull back to the 3 highs makes me wonder if 3 and 4 could get a measured move up to 47.75. Seems likely also because of the 58 low, which is a gap there. So I'm thinking 47.75 is now the target for bulls. But again, there will be sellers somewhere at this area to close the gap on the 50-minute chart. So there are 5 to 7 are by the close. Someone's asking if are 5 to 7 by the close. There are 3 bull bars, consecutive closes higher, 1 closing on its high. So it is by the close, but it's I don't like the context here. I don't like the context in the context of yesterday was a bear trend, and today is at the high of the day in a by the close rally. So by the close, you can argue by the close, but I think there would be a lot of scaling in to do if this would suddenly turn down. So the fact that bar 8 tested down and went up is more important for me. So that's why I'm thinking that bar 8 tested the 3 high and reversed up. And so I'm thinking the measured move is much more in play here. A breakout above 3, a pullback, and then continuation. So 47.75 is maybe where we're looking to go to. We closed the gap to the 58 low, as I said, but I think we're going to see 47.75. But seriously, this leg is inside bar on the 50-minute chart. So 47.75, maybe higher, and then a reversal back to the 3 high is much more what I think will happen. But what I think will happen might not happen, right? So we've got to be open to the possibility of that not happening. I think bar 8 went too far down to say that this is a continued rally. 8 is already the second leg. You see 5, 6, 7 closing consecutively higher, but then you see 8 having such a deep pullback, closing the gap to the 6 high, that 8 is for me not part of the leg 5, 6, 7. It's a new leg. So can this be leg 1, second leg, and then a reversal down? It could be, but I think that this was indicating successful breakout of the range 3-4, so I'm still expecting 47.75. But it's clear that as soon as this 15-minute bar starts closing in about 3.5 minutes, that we're going to go back to that 3 high, or not even close there, because of the fact that this was an inside bar in a trading range context, right? An inside bar in a strong rally will have some meaning later on when the pullback or when the rally changes into a trading range, but in a trading range context, an inside bar has sellers above and buyers below. The range on Friday was about 12 bars until it broke out. So this range broke out, got a measured move, the bar 12 range. On Thursday, it was about 26 bars range until you get a clear breakout. Maybe even longer, right? You can have this range, or you can look at this range. The day before, we had sort of a 15-bar range. Well, we didn't really break out. We had maybe a 6 to 8 bar range that we broke out then to the top and to the bottom of. And the day before, we sort of had 8 bars setting up the range in the open, and here we had about 10 bars. So let's give it another look here. We're now at bar 9. So we might be close to the high, and then see if we can see a reversal back to a new low. Now, bulls have been warned that their bull trend is not a bull trend. And how have they been warned that their bull trend is not a bull trend? By the fact that bar 9 went below bar 8. Bar 8, I said, was the second leg. So you have up, down, up. And so this is supposed to be a higher low because we have a higher high. And bar 9 dipped below bar 8. And so bulls know that this is an area for exiting their longs. And this is an area for bulls, for bears scaling into shorts, and not a sustained strong bull trend. So that 1 or 2 ticks below bar 8 is a signal that this will go to 47.75, that range, but it's not going immediately from here straight to Friday's high, for example. Bull trends don't look like this. Now, what it could be is that this range, this leg that was not supposed to happen in the bull trend, can still set up a continuation to 45.51 and even here to the 10 low of Friday. But don't expect now an endless bull trend, because bar 9 and 8 are not resembling the price action of a strong bull trend that way. Right? Bar 9 went way too far down for that to happen. So bears will try again to go below bar 8. Bulls will try to go above 9. and then break out the size of 9 to the upside, 49.50. But there's a lot of bulls that bought the close of 8 that will want to exit, break even. So chances are that we go one tick above 9 and actually come down instead of immediately going further up. So if you're long, I would be careful and exit quickly. If we go lower, these are areas we want to tackle. Maybe the 15-minute bar high here at 45.49, so that will be here. 47.75 is a target. We already closed the gap, so I think we can go higher to try and see what we can do at 45.49.25. That's this one. That's here. But this is a high one in a trading range context, so be careful buying above 9. You can see that bulls are trying to exit at that 8 close, and the bears are keeping their 9 high. We might go one tick above bar 9 high to trick in some bulls, but it's a higher chance that we'll revisit here the 3 high because of that inside bar on the 50-minute chart, then up immediately from here. Looks like another inside bar, bar 10. And so if we go indeed to 47.75 and the 45.48.25, the bears will scale in to close the gap to that inside bar. If we now go to the 3 high, then bulls will scale in there, trying to close the gap to the 10 low. So 10 is a nice target bar for scalpers higher and scalpers lower than 10. So you can argue bear channel, break above the bear channel. Yes, but it's the first break of the bear channel, and so you need a test of the low or test somewhere here before you can speak of a major trend reversal. Major trend reversal is a break first, a test down, either a higher high major trend reversal or a lower high major trend reversal, and then continuation to the upside. And so the only thing that we've had here is a break of this trend line, if you will. We don't have the test down, and so we don't have all of the ingredients for a major trend reversal yet. It's a slow day. I think even experienced traders now have less than 10 points scalpers profit. So it's still a slow day. Better to wait and see a top here reversing down than trying to go long here, hoping for a 20-point swing up. I think from here, 20 points is difficult today, considering the context of Friday, considering bars 3 and 4, and that darn 50-minute inside bar that has not been, no, that has left the gap now, but has not been closed yet. So I would want us to see a down test, either setting up a swing short or a clear test down, and then see indeed a major trend reversal for a swing up. Right now, this is still a scalper's market. So if you're a bear and you sold below 8 because you were thinking higher low, failed higher low, so a reversal down, then you sell more at the 910 high, hoping for 45.44, which would get you out break even. Selling up here, I think if you can scale in higher, thinking that we're going to close the gap to the 45.42.50, 3 high on the 50-minute chart, that is then your premise. That's a good strategy, I think, but you need to know how far you have to scale in, right? So you need to start shorting here with maybe the idea that you might have to scale in 20 points higher for a 3 points profit at the moment. Okay, so how good of a trade is that? It's high probability, but with high probability comes a bad risk reward. And so if I say that we're going to reach 45, 47, 75, you have the same, right? We're probably going to get here, but we're here. If you put your stop here, your risk reward is going to be terrible. If you put your stop here, like on bar 8, your stop is going to get hit because it's a skunk stop. And so knowing that we're going to get somewhere sometimes doesn't lead to a trade. And so if you hear traders say, I'm trying to structure a long, I'm trying to structure a short. Well, I'm trying to structure a long to this area, but my risk reward is all screwed up. So it's better to not take it and then try to structure a short in this area to come down to the 3 high, because that is a much better risk reward play. Bulls are hoping that they can smoke out the bears and that we can get 45, 49.50, measured move off bar 9. I'm thinking 45, what did I say? This was 45, 47.50. I think I said 75. Yeah, 45, 47, 75. And then the bar 59 high. But I haven't put my money on bar 1 being the low of the day, right? I said we're probably going to go below it, and I still think so. You can see how we hit 44 there. So I said, if you're selling here below 8, thinking that the bulls are finished making higher highs and higher lows and we could reverse down, you sell a little bit here, knowing that we're probably going to fail. So you sell more at the 9 high, and your break-even point is 44. Like this. And so when we get there, bar 12 sells off, hits 45, 44. It actually hit it on the ask, not on the bid, so everybody got filled, and bears are out break even. Now, if bears can get out break even, then the bulls are not pushing hard enough to smoke them out, to get them to exit in a panic. So the market is fairly break even, giving chances for both bulls and bears to make money. The market is fairly break even, giving chances for both bulls and bears to make money. And so that tells you to not chase bull breakouts. If anything, you look to sell here for a hit on the 50-minute inside bar, 3 high. You can argue double top, and bar 12 is setting up nicely. But we still have a good 90 seconds. Close of the hour. So let's look at the hour. So we have a wedge pullback, and this hour is now bullish. Zoom in a bit. So bears would have their stop here. They would maybe sell here, and they got stuck. There's a gap here to the 45.40 that bulls would want to leave open and now just set up a measured move the size of this bar. So they want to get to 45.50, 45.53 area. The bears would want to have at least 50% pullback to 45.41. And so after all of this bearishness, buying this close, would that be a good idea for continuation up? I don't think so. I think you still need a test of this line and then continuation. So yes, we're probably going a little bit higher, but is this going to raise up to 45.60? I'm not sure. I think we actually can get back to 45.34 area and 45.40 area. So 45.34 area is around here, which is lower than bar 1. And then yes, and then Friday's low is actually quite close to it. But bar 12 disappoints bears because it doesn't have a close on its low. It's closing a little bit below its midpoint. It's disappointing for bulls and bears, but still better to wait a little bit, see if we can get a bull breakout that follow through, or that we can get maybe 3 small bear bars, maybe a bigger bear bar, and then hit low of the day. Look at the 50-minute chart here. What are you thinking as a bull? Bar 1 was terrible. Bar 2 was horrible. Inside bar. Didn't even go above bar 1. Bar 3 went finally above 1, closed above 1, closed far above 2, but then the next bar is a bear inside bar. Okay, so this context looks terrible for bulls. The only thing they have is that we're in a bull trend on the higher time frame right here, but we had a breakout attempt above the channel that failed. We're now back at the channel line. This looks terrible, so this looks much more sideways, and if it's sideways, it looks much more that we're high than that we're low. So I think definitely going to hit this high, 45, 42.50. We might go back to the region here and touch the moving average, which is currently at 45.30. So bar 12 was the close of the hour. It was an hourly bull bar, and so chances are that we're going to go a tick above it. We still have that 45, 47, and we still have the 59 high as targets. But this is a second entry short and a double top. And so if bulls want that, I would exit. I would enter long maybe on a strong breakout pullback, but this looks much more like the beginning of a short setup or maybe a wedge stop. But I would not be holding longs after bar 9 and 10 and after bar 12, thinking that this could be a second leg trap and that we can go lower. So I wouldn't be comfortable holding a swing long, especially not if bar 13 now becomes bearish as well. Inside bar, nobody gets what they want. Bears didn't get follow through on bar 12. Bulls didn't get a breakout above bar 12, and then stronger move up to 45.50. So nobody gets what they want. Both parties are equally strong, but we're at the high, and so looking to short and short higher, aiming for a test of the 3 high, but that's scalping only. Okay. So I'm looking to see what happens when we're at the 3 high, scaled into shorts in this area. I want to see the 42.50. We're not there yet. It's not the 3 highs, the 6 highs, sorry. The inside bar on the 50-minute chart is 42.50. So that is the 6 high. Because the inside bar was 456. 456. But I think bears can get continuation and also close the gap to the 5 high. There's a gap here. So the 5 high to the 7 low, there's a gap. This gap. And in trading ranges, gaps close. So I'm thinking we can close the gap to the 6 high and then also close the gap to the 5 high. And if bears can get some continuation here, then we could set up a nice move. But because bar 13 is an inside bar, there's more bull scalpers here than bears, and so we're reverting up a little bit, but this might be all there is to that move. You have consecutive inside bars here, so you have a inside bar bar 13, so expect a couple of bulls below 13. You also have an inside bar on the 15, so expect bulls at the 45, 43.25 as well to scalp. So you have scalpers below 12 and scalpers below 13. So no miracle that 14 went a couple of points up after it hit the 12 and 13 low. But bulls cannot take over the market and push us higher. This is disappointing again for bulls. So even bulls that bought anywhere in here, they had a chance to get out on the close of bar 8 during 10, then during 11, And if they haven't exited somewhere here, they're exiting now at 14. So more and more bulls are deciding that we are not in a bull trend, and more bulls are exiting their longs anywhere in this area. And so should you if you still hold long. There's a weird psychology with beginners that they are hesitant to exit longs to buy higher because they think that they are paying a price. But in this use case, it's very smart actually to go long somewhere in here, exit here, wait for a breakout, and then just buy somewhere in here. You have probability on your side, and probability is much more important than the best entry of the day. And so if you're entering long here, thinking that we're going here, it's okay to exit and then buy later here, and then ride that part. You'll be doing 2 high probability trades, which is much better than in this context, hold on to a long and then get stopped out here only because you had a couple of times that it actually went there and you smashed your head like, oh, I wish I held to that target. No, in this context, if you hold long and you're in here, you need to exit because that's what the bulls are doing. Bulls were exiting during 9, they were exiting during 11, they were exiting during 14, and they'll be ready to enter again at a higher price. That higher price is not a punishment, that higher price is a reward because you're getting probability in return. If we now get a strong breakout with continuation, yeah, then you buy back at 45.52 and you're long there. But you're getting high probability, and right now probability is low, and so you exit. Probability will be high if you now get a strong breakout, and then you just enter again. So you should never think about exiting and then entering higher as a bad thing. That is a good thing sometimes because you get a new trade with high probability. Doesn't matter where you go long, as long as you exit higher than where you go long, you're a profitable trader. So sometimes here, getting out here at 62, when you see 63, maybe you exit shorts, you get in again at 66. So you're getting short again a little lower, but your probability is much higher now that you've overcome the 64, 65 pullback. You know that bulls are trapped. So it's another short, and it's at a lower level, but who cares? It's a high probability short. And this was a high probability of prices going higher. You don't know if we're going here, so you exit shorts, and then there's no problem exiting shorts then at a lower point later. So don't see exiting a swing and then entering it again higher as a bad thing. It's a good thing. Because you have reasons here to exit your longs. If you have reasons here to enter longs, oh, you just enter long. Who cares? It's just a number. So we closed our gap to the 15-minute inside bar, which I said we were going to close. Bears have an outside down bar, and so it's slightly more bearish at the moment than bullish. But at the same time, it's disappointing what the bears did during 14. We closed inside that range instead of outside that range with continuation. Best thing to be now is flats because our tight trading range is 46.42 to 45.46. That's 4 points, and therefore a bad area to trade. Better to see if the bears can actually take over and push us down to Friday's low and Thursday's high, or that the bulls have something to bring us to 45.58 area. And until then, it's gambling. Someone's asking a good question, a very good question. If you had to take a trade until now, what would have been the best trade? And I think when you see bar 1, and you see that on bar 2, bulls are making money, and then I see bar 3, and on bar 4, the bears were not making money. That is, they didn't reach a 1-hour target, so that would have been 45.35, and on bar 1, we did, you know that the bulls are slightly more powerful than the bears. And so when bar 5 goes over that lower high of the bears, buying the 5 close or above 5 is a good buy signal. Is it the super buy signal? Well, because the day is so fresh and we're still in that range, I think it's okay to skip it, but it would have been the best trade of the day so far. What I did instead, because I saw the inside bar on the 15, I scaled into shorts all the way here, and I just exited that at exactly the bar 6 high of 42.50, and I scalped a little bit in here, but I wouldn't say we had a high probability swing trade yet, except maybe for 5, but I think it's a tricky one because of the range that we're in and because of the proximity to Friday's low being so close that you expect, I mean, in general, you expect today to go either above yesterday's high or yesterday's low. That is by far, in terms of every day, that is by far the highest probability that we're going to go either above yesterday's high or below yesterday's low. So when we're here, the probability of going below yesterday's low is slightly higher than going above Friday's high. And so buying directly the high 1, because remember, there wasn't another high 1 yet. So buying a high 1 during bar 5 within Friday's range, it's okay to take it, but it's tricky. I wouldn't take it probably, but it was the best trade so far. But you would take it on the premise of bears not being able to make money, bulls able to make money, and maybe break out above the moving average, and the 58 low being a magnet, right? So, yeah, I think if you take it 100 times, you probably make money 60 times, so, or 55 times. So it's a good buy. But so slightly more bullish now since we're breaking above 14. Double bottom 14.15. Double bottom in this context, bulls will want to get at least 2 times risk reward based on the close of 15. So that is 45.50.50. And this is a good signal for the bulls, right? Double bottom 14.15 and then 16 going above 14. It's also high 2. With the hourly bar being a bull bar and you're still expecting that to be tested. So by going above 8 for a new high of the day, context lines up that way. You still have the 47.75 to be reached and then 45.50 and of course the 59 high. So there's multiple reasons here. I think better reasons here 14.15 to buy than there originally was here at 5. So now you're expecting at least a high of day, 47.75 and then 45.50.50, which would be 2 times risk on bar 15. In a context like this, you need 2 times risk. So 45.50.50 is what you at minimum would need or higher. So we're getting the breakout above the high of the day, but we're not getting a close there. So that is slightly disappointing. Of course, we're getting a close at that high. Of course, we're getting a close at that high. But the bears are not getting any follow through. Slight follow through on bar 4, inside bar follow through on bar 9, inside bar follow through on bar 12. So they're scalping, that's what they do. Bears are protecting their 59 high, right? So on the 50-minute chart, here, this is their lower high. And so they don't want bulls to break their lower high so that they can get a new lower low. And so that, what is it, 45, 49, 25 here. This one is what the bears want to protect. So our sideways range is basically now extended, right? We're stuck in this range. Yeah, there's targets coming together in the 45.53 area. This was a test down. This was a double test down. So could that be a test with the 70 high from the 77 low from Friday leading to a 45.53? And can this range not be a sideways move that on the breakout would also lead to 55.53? So we're getting some area, some targets in the 45.53 area. It's not all that clear, but we are going higher, and we've set now a new higher low on 14.15 with a strong entry bar 16. So bar 15, the high 2 with a double bottom leading to a 45.50 as a target, had a good 16 follow-through bar, 16 entry bar, and now bar 17 is holding the 16 low and moving higher as well. So things are shaping up nicely for the bulls on bar 15. But overall, what do you think if you just look at this first 6 bars? Is this a trading range day or a trend day? Right? Now, often the day is defined by the first 6 bars. And so if you define the first 6 bars, they go sideways. Most of them overlap. And so today is going to be a trading range day. And we will come down to close gaps continuously. So the gap to the 15 high on 16 immediately got closed during 17. And so even if we go higher, 45.50, we'll come down and close gaps to the downside. And if it's a trading range day, also the range is going to be in the lower band of the average. So it's going to be around 30 points max. So that means that we're now at 10 points. We could get 20 points more. But this looks more like a day where we're going to go a little bit higher and that we're going to go lower as well. That bar 1 is not going to stay the low of the day. Bears trying to break that double bottom, obviously. Bulls will definitely exit below that double bottom. Especially bulls didn't get their 1 hour on bar 15. So let's see what bears can do on 18. Some bulls that bought the 15 close, if 18 closes this way, they would want to give up on their dreams of 20 points higher because of bar 18 at the moment. It's not closed yet, we're just halfway. But if it closes as a big bear bar, some bar 15 bulls will try to exit break even, and some bar 16 by the close bulls will try and get a scale in at the bar 16 low and then exit break even at 45, 75. But we can still turn this around as well and reverse back up after bar 18 and get a new high of the day. But as I said, during bar 9, this is not a bull trend, okay? Because bar 9 and bar 8 would have not formed if this was a strong bull trend. In fact, bar 9 would have probably be a smaller bear bar, and bar 10 would have immediately created a new high of day if this was to be a strong bull trend. Can we get to 45.50, 50 line, big line here? Now, of course, bar 18 shows you exactly why stops exist and why you need to wait for the stop. Because bar 15, I said, double bottom bull bar, bulls want to get 45.50, 50. 18 comes so far down that you're getting scared about your stop getting hit, but bulls will defend that stop, and in this case, they bought the moving average, as they have been doing during 5, and we reverse back up. When we reverse back up, some bulls will use that reversal to get out, spooked by the big pullback that bar 18 caused. I think the buy the close bulls from bar 15, they'll still hold because bar 16, 17, and 18 all closed higher than their entry price. So they will give it a bar or two more to see if we can get to 45, 50, 50. I think if you bought bar 16 close, yeah, then you probably bought more at the 16 low and got out. But the bar 15 buy the close bulls, I think they'll still give it a bar more to decide what to do with this trade. Now we went above bar 18, which is effectively ending a two-legged pullback, bar 17 being the first pullback, bar 18 being the second leg of the pullback, or a fourth-legged pullback with bar 17 going down and up, with bar 18 going down and up. So you have down, up, which is basically then four legs. But bar 19 needs to show more bullish strength. Will the bulls hold and not give up on their swing from bar 15? You have the 15-minute chart working not very strongly bullish, but also not very bearish. Right? I am still thinking that bar 1 is not going to be the low of the day. But I also don't have a strongly bearish signal. So bar 18 forms the bar 18 rule, 90% chance that we've seen the high or the low of the day. But 90% seeing the high or the low of the day means 10% that we can get still and a new high and a new low. I am thinking that this day is in that 10%. And so that we could get a new high and a new low after bar 18 today. And it's the context that made me think like that. So the range is still small, 10 points, 12 points, probably going to double still, but we're also probably going to get a new high still. So with those targets here above, I think we're going to hit at least targets close to the bar 58 high. But I'm also still thinking that we're going to get a new low of the day. So I'm thinking because of that this is one of those 10% days where we're going to have a new high and a new low of the day after bar 18. So this is a perfect example of what I just mentioned. Say if you bought 15 and you now have a good entry bar 16, but now you're getting 3 bear bars. Why is it not okay to exit your swing now and then maybe enter again if it goes higher after that? Right? I think that is a perfect strategy because my conviction in my swing long has been evaporating on bar 18. Luckily that closed well, but now bar 19 is a third bear bar. So 3 bear bars, good reason to exit longs on a swing if you bought 15 or 16. Now, if it breaks out anyway, then you can just look to buy again. I think that is no shame in that, because chances are that we're now going to break below 15, and why risk that? If this was a good swing, it would have had a second bull bar within 5 bull bars after the entry. Right? Bar 16 was good. Yes, chances are that we're still going to go to 45, 50, 50. But any of these 3 should have been, in my view, a bull bar. I just want to see immediate action towards my goal, and 16 gave me that, but 17, 18, 19 were all so disappointing that I don't see us like moving immediately 20 points from here. It's still a small pullback bull trend, and that's why it's so tricky. That's why it's also good to just rely on your stop there, double bottom 14, 15. And yes, chances are that we're going to go to 45, 50, 50. But I'd rather than buy maybe somewhere in here, a good looking bull bar, than to hold if I just had 3 bear bars directly after my entry. And part of my reasoning is, of course, my look here at the 50-minute chart. I don't see a lot of urgency here. The thing to notice after bar 8 is that we've had more bear bars than bull bars. And so there's bear pressure piling up here. We've had an 11-second leg up from the buy to close rally. We had 15 double bottom with 16 follow through. But we've had 3 bear bars here, 3 here, 2 here. And well, we don't know how this is going to close, but it looks bearish now. So bears are getting strong in this area, and bulls are using new highs to exit longs, and they'll buy only lower. So bulls are not buying breakouts anymore, or already not since bar 9. They're only buying low and they're selling at highs. And bears are collecting selling pressure. So we can still go higher, yes, but this is selling pressure building up, and that selling pressure will eventually come down into a bear leg that is probably going to close the gap to the 5 high and go even lower. But selling pressure, there's more selling pressure here than there's buying pressure. Only 15 and 16 were good for the bulls. And yes, there are tails under every bear bar, but they're still bear bars, right? More than that there are bull bars. Still small pullback bull trend until we break some higher low, which is currently at 14.15. But very difficult to hold swings for what? For 45.58 that we might not get. So still tricky environment, small range, 42, 46, now 45, 42, 45, 47. So it's a 5-point range that we're going sideways in, slightly more up than down, but mostly sideways. Every bar has overlap. The bars are followed by inside bars. So it's more of a limit order environment that is not moving very quickly. Then that is an area for finding a 40 points swing, right? I think until the double bottom is broken, bulls will hold for 45.50.50. But looking at all of this price action, I'm not interested in joining them. And that can happen, right? So I'm thinking that we're going somewhere. I'm thinking that I see a trade, but I'm just not interested in taking it. Call me chicken. Call me chicken. Rule 1 is to not lose money. Rule 2 is to make money. And rule 3 is to make a lot of money. I'm sticking to rule 1 today. It's a new leg in the small pullback bull trend. 45.53 would be 1 hour on bar 21. So 45.53 is going to be a little bit the target area. We have a 50-minute target there. We have a 5-minute target there. We have a measured move from Friday there. But we want to see 45.50.50 first, and then 45.53, yes. I think 21 is a very good statement, right? That's a bull statement. We're going higher. Take a look at the Globex. Globex hourly chart. We have a good bull bar here with strong follow through, so we might get a measured move up that bar, 45.51.50. It's also the close of this bar, 45.51.75. So strengthens my belief that 45.50.50 is going to be reached, because 45.51.50 is also a target, and 45.53 are targets. So probably going higher into that zone to see what's there. I want to come back to the mental preparation part that we talked about just before the open. There's different camps in trading land about mental readiness and mental training. I am personally of the camp that trading is a performance art, and therefore it has a high degree of mental capacity, and you need to have a good mindset and a good read and a good, so you need to be in a good space to be able to trade profitably, and distractions and emotions and all of those things will harm you. I've looked a lot at Wimbledon, and generally over the last couple of years, I've been looking a lot at tennis in general, because I think that tennis is one of the sports out there where you can really see the mental side of sport in action. Other sports are team sports or individual sports that go much slower, or individual sports that you can't really see, like in racing, you can't really see a driver. Golf, I think, is an example, but it goes a little bit slower. You can really see mental capacity at work, where tennis matches aren't lost in 5 sets. They're lost over 1 or 2 moments in a game, where you can really see the mental side giving in, or where tennis players have that are trained very well on that side, they have a side where they can forget about a mistake, or where they can resurrect themselves, or when they can just give in and over 1 or 2 points, and you can see that a big miss translates into the next game and into the next set, and ultimately they lose a game. I think I was watching semi-final, can't remember if it was the women or the men, where there was a tiebreak and somebody had a terrible miss in the tiebreak, and the next 3 points were lost immediately, and he lost the whole match just because of 2 moments that he could not recover from. And I think that is where you can really see the difference between winners and losers. Are you going to take your previous loss into your next trade, or are you just going to forget about it and take the next trade as it comes, without worrying about P&L, without worrying about previous results, without worrying about having a bad day, without worrying about having a fight with your spouse? You need to be in an ultra-neutral situation where you have confidence in your read, confidence in your ability, regardless of last day's result, last trade, your read, and you need to be able to have the capacity to get yourself into a zone prior to the day, preferably, where you are neutral about what's coming, neutral about what has been done, and you can get yourself into a zone or a state or whatever you call it, to not worry about other things and just focus on the task at hand. And I just think that trading is a lot like tennis in that perspective. There's a trick that I never knew, but there's a trick that tennis players do. You ever see them, like, they're getting like 4 balls before service? They're asking the ball boy to throw them 4 balls. Well, you only need 1, right? So they'll put 1 in their pocket for the second serve. They'll use 1, and they'll intentionally look at 1 or 2 balls that they have in their hands, and then they kick them away. This is a trick called mental parking. And so if you make a mistake, what you want to do is you want to carry that, you want to put that mistake to the side, right? So you have a bad trade, you move a stop, you do something weird, but you want to put that to the side. You want to be able to focus on your next trade, regardless of the mistake you just made. And so what they do is they look at that ball and they place mentally their mistake or their error into that ball, and they then kick it away as if they're mentally parking it to the side of the match. We'll look at it later, we'll review that mistake later, but not now. I need to focus on the next point. And so you see them taking 3 or 4 balls, they'll look at that ball, and then they'll actually like tennis it away back to the ball boy, and with that mentally parking their mistake to be reviewed at a later time. I think that's an incredible technique to be used in trading as well. Yes, you'll make mistakes during the day, you'll forget a stop, you'll forget a target, you'll trade too big, you'll trade too small, like whatever you do, you'll make mistakes, but you need to mentally park them, write them down, to be reviewed at the end of the day when you're in a better state to actually deal with those, and just carry on with the task at hand and put good trades in to offset all of those other mistakes. So if you haven't watched it, watch watch that Netflix documentary. It's insightful to see how mentally that sport actually is, rather than just being able to play good tennis or good golf. You actually need to screw your head in the right way. And trading is much the same way. I can tell you in advance when I'm going to have a losing day, because it's probably when something emotionally happened in your life that is when you'll have a losing day much more often than when you're just calm, relaxed, well rested, etc., etc. So no, and we were in Pacific time zone, so we could watch Wimbledon early in the morning, and I just had an incredible time, an incredibly good time focusing just on the mental aspect of how these players operate with their pressure. So a lot to learn from that, definitely. Okay, 22 inside bar above 21, but still going higher, I guess. I think 22 might be the pullback to the range of 18 and 20. 18 and 20 leading up to 45, 50, 50. So that is definitely becoming a strong target. We are more than likely to get there. It's the second leg on the 50-minute chart, so leg 1, leg 2. You can also argue wedge, 1, 2, 3, or here 1, 2, 3, but still going higher. At this point, you need a double top, and all the gaps are being closed, just like what I mentioned here about the small pullback bull trend from Thursday. You had, no, it started here, but no gap was left open, right? So this gap got closed here. This gap got closed here. All of the gaps on the way up were closed all the time. And so you can either scalp the gap closes, or you can just run the small pullback bull trend to a target that you have defined, such as the 4553 or even higher. And that's what's happening here as well. So small pullback bull trend in the making. Can this be spike and channel to here, 44.53.75 or 45.52? Yes. But also it's closing every gap that it takes on the way up. So instead of buying this close, it's better to actually buy the gap at the 22 high, thinking that we're going to go higher. We are at that 54, 45, 49, 25, but we haven't gone a tick above it yet, and that's what we need. And then 45, 50 and a half. If we're looking at the day, we're still on inside bar on the daily chart. And we're probably looking at Friday's high, Thursday's high there. And so our next target is 45.53 area, with also bar 21 being 1 hour there. So 45.52.75, 45.53. But gaps here to 23 high. And so a little bit more scalping by the bears first. So 45.50.50 was the 2 times risk target of bar 15. I said bar 15 is a high 2 and it has a double bottom. To take a trade like that with such, it has lower probability, so you need at least 2 times risk reward, and that is 45.50 and a half. So that was bar 24 high, reaching exactly that point. Probably going to close the gap to 45.48. All the gaps on the 15-minute chart have closed every time till now. The newest gap is to 45.48 high. And so we probably want to close it unless the bulls can now accelerate and set up a measured move. Then the bears will sell into the target area 45.53 and then break even to 45.50. Bulls want to get 45.53, right? close of 26 from Friday. The measured move on the 60-minute chart on the Globex. And a measured move the size of Friday's low to the 70 high, which got tested here on bar 9. And so I'm thinking that if 7 and 8 is a breakout, then 9 is a pullback, and then the measured move is 45.53. So multiple targets at 45.53, and therefore a likely target for the bulls later today. And someone is reporting that they made a good trade and profit, so congratulations on that. That is awesome. We're breaking out, of course, above a bull channel. Draw the bull channel like this, draw it like this, however you want. But breaking above a bull channel signals climactic behavior, so we could either pull down to the moving average, or we could continue up and set some sort of top there. We're at resistance here with the 58 high, so although 45.53 is a target, we have to also take that into account. That if we get one more bull bar, we're probably going to get a measured move up the size of this channel to 45.5350. But from there, it can actually go back to the trend channel line, go sideways and come down to the trend line. So it's going to close as a bull bar. Yes. Yes. Nice. And so chances are 45.53, but that is then also an area to take good profits. Somebody mentioning about the 15 double bottom bull bar high 2 for 45.50 area. I think that was a good buy. I also said it's good to exit longs here after 3 bear bars, but only if you're able to buy again higher at a higher probability. So if you don't buy again when it goes higher, then you need to keep your stop here at the 14.50 low. But if you exit somewhere in here, 45, 46, you need to buy this close 21, because now you have probability on your side for 45.50 and 45.53. So if you give up on your long somewhere here, you have to buy again here at the 21 close, or at the 20 high when you think that this gap is going to close. That was what I said. It is okay to exit a swing as long as you're able to quickly buy back that swing when you realize it's going higher anyway. Otherwise, this is a Walmart trade, and you buy the close or you buy one tick above, and then you physically have to leave the screen if you're finding yourself exiting good swings. Then you physically need to leave the screen. Okay, so we're getting breakout above the channel. Measured move up is 45.53 area. I would say 26 close of Friday, 45.5325 would be a good area. And this bar 21, of course, should get 45.5275. You also don't have to punish yourself. Other things will punish yourself already. So if you're missing a small pullback bull trend, that is not a bad thing as long as you're not trading against it. But small pullback bull trends are hard. It's hard to recognize that this is a higher low from this after, and then sets a new higher high, then this is a new higher low. You're getting a small pullback bull trend. This much more looks like a trading range, but if you pay attention, this is a higher high and this is a higher low, and therefore it's a bull trend. Although you can also say it's going horizontal, we get a breakout, but it's a small pullback bull trend all the way up. And they're just really difficult to get confidence in. So in a small pullback bull trend, I'm just scrolling to see if I can find more examples. In a small pullback bull trend, you have to just believe that your higher low is going to stay a higher low, and that your pullback can be 80% or deeper. Like bar 18 came to, what is it, 70% pullback of this rally up to a new high, but it didn't hit that low, nor did 1415 hit the low of the 9 low. And so now we have 21, which is the new low, and we're now getting a new rally up. I think this pullback is too short. You need like 3 bars of a pullback, so the low is still 21. But we could come all the way down to half a point and then reverse up to a new high. And that is the sneakiness of a small pullback bull or bear trend. It's that 70–80% pullbacks that just make you spook out of a good trade. Let me just see if we have one. Yeah, this is a good example, maybe. So this was a pullback with a new high. This was then a new low. Yeah, the pullbacks are not all that deep here, but they're quite deep here. So you have a new higher low. And then, yeah, it's not really a good example here. This is very small pullbacks. Sometimes the pullbacks, well, these are deep pullbacks. It's come a long way, but they always make lower highs. Even if it's one tick there, it's still a lower high. So you have to trust that the trend will at least continue or test the extreme. And even when it does break out above a lower high, it still comes back. So in this case, that low was tested by that low, but it didn't go beyond it. Okay? So it's a small pullback bull trend. And it's also, it looks like a trading range, but it's going higher with higher highs and higher lows. So now what are we thinking? Are we still going below Friday's low, or are we going above Friday's high? I'm not sure if it's going to go above Friday's high, but we have strong follow through on the hourly chart here. So we can take bar 1 to 12. We go back to the one that has numbers. So the low of bar 1 to the close of bar 12 is 45.53, so we'll probably get that. 2 times risk will be 45.6150, and that becomes now a bull target as well. That would also be about 20 points from bar 5, so not unreasonable to think that we can get there. What is against the bulls now is the breakout of the channel, because that is a buy climax. And the buy climax often works in the form of a measured move, so to 45.53 area, a test of the trend channel line, so a test of here, it might bounce and then come back and test this line. It can, however, also continue on the trend channel line for a long time, but it will ultimately come back and test the trend channel line. And if we get a big bear breakout, I think bar 5 is still in play, that we actually might get to the high of bar 5 if we get a big bear breakout. But that will be towards the end of the day. So 45.53, 45.53, 25, definitely 45.52.75, which was 1 hour from bar 21. And I've said it before, and I'll say it again. The fact that we are taking profits on longs does not mean that we are shorting, right? A take profit target for bulls, the fact that we are at a measured move area or a profit zone does not immediately mean that we are shorting at those levels. It's just to see what's happening here at this resistance. If that breaks, the bulls will try and go to the next resistance, which will be Friday high. If it holds as resistance, then bears can get a setup and indeed a swing short. or at least a scalp short. But taking profits here just means that we are at a resistance area, at a measurement area where it makes sense for bulls to take profits because of the risk reward. But if bears show up here, that's still to be seen. So when I'm saying take profits at a particular area, I never mean take the opposite side. I get confused by that more often. So with 10 minutes to go, this hour looks to be a bullish hour as well. We don't know yet, but it looks to be. So the next hour is probably going above this hour. So if this hour doesn't get to 55, 53, then the next hour will probably do so. Also, this 15-minute bar had very good follow-through, so you can expect that we're going to get a measured move the size of this 15-minute bar, 43.50 to, am I doing this correctly? 43.50 to 48. So 48. So that's 52.75 as well. So still going higher than this. Even if we now pull back to the trend channel line, you're probably going to get them a little bit higher. We've got 10 minutes left. There's a good question that just came in. Took a little time to read, but basically the question is, getting into swings is, this person says, getting into swings is difficult because there's so many reasons to exit all the time at so many points. And that is a very good question. Now, first of all, I think there are days where a swing is easy, right? Trend from the open or strong trend somewhere after a bar or 10, 12. And even then, there will be pullbacks along the way that might be deep. But in general, the idea or the move or the targets are far away enough to just hold for a swing. What you'll get is that if you get further along in your, no, there's two things. If you get further along in your trading career, you'll often stop a swing because you see that there's a small scalp in the opposite direction and you want to take that and then you want to continue your swing. And so you're not so much holding for a long time because you're also scalping all of these intermediate moves. And that is when you become, when as a trader, you're able to take way more than the daily range because you are exiting your swing here because you know that we're going to get a pullback, you're entering there, and you're riding all of these in-between moves as well. So you're temporarily getting out of your swing to go back in because you know that pullbacks occur. That is, I would say, advanced level trading where you just know, like, well, it's better to exit here apart or everything because then I can get back in again and again, in, out, in, out, in, out. And so that way on a 20-point swing, you rack up 45 points, right? Now, if you're beginning and you see we're going up, so you see bar 15 or you see 21, you can still hold this and know the resistance levels. So if I'm holding since 21, I want to get 45.60 or something, right? I want to get 20 points. So I want to get 45.70 if I go for 20 points. Now, the trick is to then know resistance and see what's happening at resistance. So you're not blindly exiting 45.53 because I'm saying that we're going to go there. You're holding because you're holding for 20 points. But what you are aware of in that context is that there is some level of resistance here. And so you're monitoring the situation. I mean, your entry level is here, okay? So you're good. You got 4.5 points, but you want 20. And so you're just monitoring the situation here. Try to see what's happening at this resistance. If there is resistance and a top and a valid short setup, that's when you exit your swing. If there's no valid short setup and you're just getting a little bit of a pullback, then you can just hold as we overcome that resistance and move in the direction of 45.60, 45.70. So you're still here in that in the buy the close from 21, and there's nothing for you now to exit, even with this big bear bar. You know that there's profit taking place, and you might see bears scalping a little bit, but your target is to just go 20 points. Will that result in a lot of break-evens? Yes, that will probably result in 50% of the time break-evens, where you could have taken 5 or 6 points. But if your game is to only rack up 20 points, nothing, or a stop, then you should do that, and you should just hold for obvious levels here further above than this 45.53. So I'm going for 20, or I'm going for break-even. Or I'm going for 20, or I'm going for this 10-point loss, 5-point loss, whatever. And so if you then have half of your trades break even, 30 to 40% of your trades 20 points, and 10 to 15, maybe 20% a loss, you're a very profitable trader, right? So the fact that we're then saying 45.53 is a target, that would not be of interest to you, because that is not enough profit to you. And so your style is then to take 2 or 3 days a week, 20 points. You'll rack up 60 points. That's 3K a contract, right? But you need to go for that 20 then. You can't compromise for 5 or 6. And so if you bought 21 close, you would still be holding, and you'd only take off when we get close to the Friday high. So levels reached 45.53, 45.53. Some bears are scalping there. We get the measured move now on the bull channel. So I'm expecting a test of the channel line here at the 23 low. At the 23 high. We could test the channel. Could still go up to Friday's high, but chances are that we need to test the channel line first. That we're going to come back to test the 23 high and the moving average. So I think this is getting climactic, and this is getting too extended, and we actually need to go sideways to down for a while before going much higher. 45.55 would be next target to take out for bulls, but that's not going to happen in the remaining 3 minutes. But that would be next target. So look at the big bull bar that we had here. Well, we just covered that measured move. Look at this range here. That's going to 45.50. Look at this bull close, 45.5175. We also covered that one. So there's a lot of profit-taking areas here for bulls, but there's also already 4 strong bull bars on the 60-minute chart. So chances are that we still go higher, even with a pullback to 45.47. So the next one is here 45.55 and 45.57, and then Friday's high as targets. I think bar 15 was probably the best trade of the day, the double bottom that held. That one, you can argue that this is the best trade of the day, but considering the context, I think it's too difficult. But bar 15 was the best trade of the day. Definitely the close of bar 21. Especially if you wanted to buy above it, you first had then 22 as well. Great pullback, a continuation long, and then the measured move of the channel to the 45.53 area, where so many targets were coming together. That was definitely a good target. We're now going to decide if we're going to have a more extended pullback, or actually some type of reversal, or that we're just going to continue straight up to the Friday's high. If I'm not mistaken, we have Rose coming in after me, so that will probably be an hour from now after lunch. Take a look at the calendar. Yeah, she is scheduled. So she will probably take a lunch break and then come back at I'm sorry, jet lag, what's the time? So that would be 1 p.m. Eastern. So just keep the webinar open, and then she'll come in around that time to take you guys either to the Friday's high or to take you guys back to into the range of today. Now, if the bulls are serious, they can get a measured move to the size of 29 to 45, 56, 75, and 45, 57. But we're still getting climactic here at this, after so much bullishness here after this micro channel. I think it's a profit taking area more than a going long area. So, all right, with that, my time is up. But don't worry, Rose will take over, and I will be back towards the end of the month at the 28th. So that will be Friday the 28th that I'm back. In the meantime, there is the Europe channel that European traders are trading in. I'm there as well. Thank you very much for the time today. I will be with you on Friday 28th, and in an hour from now, Rose will take over. Good trades, everyone, and talk to you soon. Bye-bye.
Hello, traders. This is Rose. Today is Monday, July 17, just about 43 minutes after 12 o'clock noon. All right. All right, so the market went sideways and up. First couple of hours of trading, and it's testing prior pivot levels. And that was resistance. It's coming down with several legs, but bulls want a bull flag there. Okay. And they want to keep going up. So on the daily, we have somewhat of an overbought conditions with a measured move target for bulls. There was some profit taking on Friday, but pretty climactic since March. If you look at it, since the March. So that makes us overbought. But I think the bulls still trying to go higher. Bears, if they see bulls fail, not be able to take out Friday's high, might be looking for a second leg down. But in order to start some kind of a sell-off, they need today to close on its low and become a consecutive bear bar. Then they might look for a second leg down. But we have a target here, and they want to get the measured move target. So the bull's still buying the pullbacks, but depending on where today closes, an inside buy right now. So I'm going to get rid of this. I no longer care for that measurement. The weekly, last week was a strong bull bar, inside, outside, kind of inside. Okay, so if this week is, even if it comes down, but starts to close bullish, you got to also think of, if I buy at this high, where do I put my stuff? Stop. So you're going to put your stop here, there. So you're assuming market is going to get up to here. So we might end up coming down a little bit, possibly maybe to the breakout point before we go back up. So this week might actually end up coming down a little bit, but open gaps, buyers waiting, and buyers have a really nice measured move to the upside. According to last week's range, we are still trading at the high of last week's range, and these are hourly bars. Bulls want to go and break above the prior high. Bears want to double top, lower high neckline, and they want to have a reversal back down to this area. There are a ton of bears. They want to sell. So if this bar closes bearish, that would be first sell, second sell, and they would start the sell-off. But where is that follow-through bear bar? Good sell signal bar last hour. Some order sold, but this hour needs to close bearish. You got a leg one here. Bulls are still trying to get the leg two. So I didn't sell anything. I kept buying. I did some selling on the 5-minute some counter trend is here, but that's all I got. And then I took profit because this is where I thought we would get some kind of a support. So I think the bulls want to continue to go higher. High of yesterday's target, prior highest target first. So I don't think the bulls are going to let go here. Now, somehow, if they get exhausted, then we start to, start another leg here, come down and test this area. That would give us a kind of a head and shoulders pattern, maybe complex right shoulder, but there are buyers here. So this head and shoulders could fail. But I want to check something here. So that's leg one, pull back, leg two, pull back. So market wants to bring the price down to here. So we're going to see if there are any sellers here or furthermore up and trap the bulls and see if we can. But if we do come down here, it doesn't mean that we're going to break this and keep selling. This area could hold and we could bounce and go right back up again. So it's one pullback, two pullback, kind of three, or one pullback, two pullback, and a third leg down, and we have a much bigger wedge bottom, and then we could go back up again. So this was my bull target. Most of my trades were bullish trades, so I bought and scalped and had a swing up. I don't know about here. Obviously, bulls might need another leg up if they do see a wedge here, 1, 2, and 3. I still need that pullback before we go higher. Or we're just going to keep going higher here. And 3 bull bars. The third one closes also strong. Good momentum. They're probably going to try to push it all the way to high. They might make a new high. And then that way, there will be no head and shoulders pattern. So just watching if we're going to get a third bar here. On the Globex, there's parabolic wedge here. 1 pullback, 2 pullback, 3, or 1 pullback, 2 pullback, 3. So this might need a second leg down to the moving average, or somewhere in here. Okay, we could still sell, but I think the buyers might be waiting there. So that is approximately here on the 5-minute chart. I've kind of left the measured move targets, but if you measure from here, they didn't even meet that, so they might actually keep selling this. Let's see if we can get a leg down. But 3 bull bars, I don't know if I want to sell this. I need a bear bar at least, so I need to see that one before selling anything. I'm not going to sell this because it's obviously trying to get to the bar 33. So the bears are trying to disappoint the bulls, but bulls see a head and shoulders, inverse head and shoulders. Okay, they had, this is their target, by the way. This is their projected target. They're trying to reach here. They already reached there. So that, and then they closed above it, came back down. They're trying to reach here, but ultimately the projected target is high of yesterday. So this is why I'm not selling anything. Plus the 3 bull bars, that is signaling me bulls are trying to test the prior high and get back up to here. Yeah, that was a 20-point take profit. So since the bears did not make any profit here, if we take out that high, that means price is trying to get to 30 point, and possibly even it could go up further to 40 point. So, but this is the target. This hour is trying to get above the last hour's high. and have a second leg up. Can we get a major trend reversal? What if we make a double top and fail? Can we come down? We could even make a higher high, double top and a lower high and sell. But since there's nothing there, you just have to let the bulls try to get back to the prior high. A failure to make a new high. We could have a double top, lower high, wedge top, maybe wedge here, undershoot, overshoot. 1, 2, 3, 1, 2. We might get a third push. So I could say maybe 1, 2, and 3. 1, 2, maybe 3. If we do have higher high, I really don't know if I want to sell. I really need to see strong sell bars, bear bars. I think the market is still trying to get up to here. First here, then up to here. You know, measured move. Take this if I want to be conservative. See how this area becomes an interest for bulls. Did they get their measured move here? Yeah, they have not. So bulls might be also trying to reach here. You can see that's the measured move right there for that leg. Kind of failed here. It's still always in long. Market is still always in long. Now, in order to stay always in long, there's a two-legged bear move here. And move started, but it's weak. You see how weak it is? Look at this leg, and then 2 bull bars. Look at that bear bars, 34. And then a bull bar, and then 2 bear bars. So if bulls actually observe all those sell orders and get above it and close, that means we're definitely always in long, and we're definitely going to try to get above the 45, 55 and get back up to these highs. Can we trap the bulls somewhere here? I'd say we would maybe go up a little bit because we're forming a really large double top neckline. Look at this. And we left this ledge behind. When the selling begins, we're going to get back to this ledge and close this gap very quickly. So we are nowhere near trapping the bulls. So the market is still trying to go higher. But there's a really good potential here. And if we can actually surge, get up here, close the bow, pull back, go, then I would look for a topping pattern, maybe like this, and then start to come down hard. That could create a head and shoulders, maybe bigger head and shoulders. Wedge top, lower high is a head and shoulders, and we could start to sell. We could come down here so very quickly, an area of interest. But we are nowhere near trapping any bulls yet. I like to see 45, 55 tested at least. Crude. Are we always in short? Well, yeah, definitely. Look, you got a wedge, you got a lower high, head and shoulders with a bear flag. Oh yeah, and we are also below the 1 hour EMA. To me, when a 5-minute EMA moves underneath 1 hour EMA, that's a long-term, always in short setup. I will sell the pullbacks to the 5-minute EMA until I no longer can sell, and possibly that's because we reach some kind of a support that the buyers are waiting, and then we start to get above the EMA. Short-term, we become always in long, but in long-term, we are still always in short. On the hourly, we've reached strong resistance, S&P, so I'd be careful there. This whole area is resistance. The 15-minute is trying to get continuation to upside. NASDAQ is also trying to get continuation to upside. Might buy the pullback. But there's also a trading range here. You got a strong move, and now we are in a trading range. What can the bears do? If they see a lower high double top, they see a neckline, and they see this as leg in a trading range, and they want to come back down here. But we need a reversal pattern. That means we need to trap the bulls before we start to sell. So you get 1, 2, 3, 4, 5 bull bars, but it's kind of a leg in a trading range. So there are always sellers here because they see the trading range highs. They want to bring the market to the midpoint first and then to the lower point. I think I'm going to make this circle smaller because I don't think you guys know exactly where I'm pointing. So let me try to fix that. Didn't do anything. I don't know what I edited. I edited something. Circle width. That's all. Doing nothing. So I have no idea. I'm editing something, but then it completely overwrites. Okay, so that didn't work. That's the cursor. Interesting. Sorry, I gave my best. 3 times I will try. Nothing happens. I cannot waste more time. It's not letting me edit. Parabolic, leg up, a couple of legs. So a deep pullback. Bulls buy again. So you have a very limited time to sell that into this breakout test area. Anybody sold and stuck, selling at the highs again. I did say the market is trying to get to the bar 33. We reached that. So if this is a leg in a trading range, some bears are selling again because they want to get to the 50%. Think of this as 80% of the time, the market reaches the 50% range. 60% of the time, it actually reaches the bottom and lets those bears out. If they can't, then we get a breakout. But bears need a good sell signal bar here. But I think bulls are eyeing 45, 55. So I'm not interested in selling because I think there are buyers underneath 42, above 40. Why? This is kind of a breakout bar with a gap and a follow through. So here's the pullback. Limit buyers are there. They might need to get above bar 31 high before even having an attempt to sell, perhaps. Now you have an inside bar and inside bar. Can the bears sell here? 43 is an inside bar technically, and it's a doji. And at the high, not all the way high of this small trading range, but it is. So, but in order for bears to sell and get the market to the 50% here, they need a bear bar, and then they want to look for continuation. They don't even have that bar yet. So this could be already a pullback, and perhaps any bear bar they can buy again. Bears want to keep going up to 45, 45, 55, and furthermore up to 59 area to 60. 60. See what happened there? As it got up closer to the high, bears sold and then came all the way down. So if you are a bear and you sold underneath 36 and you were looking for a continuation and got trapped with 37, you sell at the high. Where do you sell? I always look for a strong bear bar closer to the high of a trading range. So bar 31 open is where they sold. Now that is their break even right there. Other bears is we want to see that bar close below that break even line I'm pointing at, and then they're going to remeasure and they're going to try to sell, and this will be their break even. So they can still bring the market down, but if these bears start to exit out now, okay, and this bar won't close below that dashed blue line, we could suddenly find ourselves going back up again. We see how that worked out. I said, don't sell here, let it go up a little bit at least. Now, can the bulls get a break, give up bar here? Because bears see a double top, wedge top, double top, lower high, and a major trend reversal. And that's the neckline, 38 low. They want, like I said, they need a give up bar printed so that all the bulls can give up. But this is nothing but a leg in a trading range and a leg in a trading range, bears and bulls. So what we're doing is testing the 50% of this trading range. As I pointed out, that is the 80% chance probability we'll get there because of the stuck bears down there. The goal is to get there no matter what. Now, if they can actually close a really strong bear bar, then they're going to get their 60% chance. Bring it down all the way to here. But that doesn't mean this could sell. In fact, if the bears bring the market here but fail to close a bear bar underneath 38, it's going to go up and it could end up going back up again. That will be a failure to break out from the neckline. That kind of invalidates any kind of pattern, that kind of failure. But bears want to get a strong bear bar, start the selling so they can get to the 38 low. Why? Right, so leg 1, pull back, leg 2, pull back, leg 3, get down to here, break it, make a small bear flag. Eventually, this is what they want to test. Okay. That's technically a second sell, I guess. This is the first sell under 33, and a second sell underneath that doji. So bears want about 5 points, maybe first 2 points, then 4 points and 5 points by selling underneath. So they want to get to that one at the minimum, 225. That's what they want. The only problem here is the ATR. ATR is barely 2 points, not even 2 points. When I see ATR is so tiny, and they already sold here and they got it probably 1 point, that should be 125. Just about, see, but no more, I don't sell. That kind of scares me because this was a break even. So I didn't sell. I wanted to see the break even. I wanted to see a continuation. Anybody who sold underneath this doji made a point, but no more. They didn't make it 2 points. ATR wasn't even flagging no more than 1 point. I see that. I don't even touch it because I got stuck here trying to sell. I was selling here and I had every right to sell. I couldn't even make a point. I kept trailing my stop order. From here, I didn't get filled, and I didn't care to sell there. I thought maybe we were going to break out. But then this bar happened, 12. I trailed it underneath 11. I got filled. I couldn't even make a point. I said on Discord, when this happens, I decide to do two things. Either I go flat, take the loss, or I reverse, because with the micro double bottom 14 and 15, market is saying, you're not going to get that 1 point. If you're not getting 1 point, there's no point staying in the market bearish. Just going to take out that high. Might as well go high, or just wait for a breakout, wait for a pullback, then buy above this bar 20. So that's what I did. And then I added more above 21, and I even said we are going to probably go to 1-to-1 right there. And that was the 1-to-1. So, and then I was off to lunch. I mean, yeah, I mean, they're buying the pullback. So this is, I guess you could say this is small pullback bull trend. Bulls are doing phenomenal. And you got a parabolic now move up. So that first pullback is going to be deep, and most likely they will buy it. So it's always long. Limit order bulls are buying the pullbacks. Yeah, you can buy any good-looking bull bar, good-looking bull bar 15, good-looking bull bar 5, follow through, buy, right? This is not a good-looking bar, but they bought it anyway. They bought the pullback. Good-looking bull bar 21, buy. Now you're gapping out with leg 1 pullback, leg 2 pullback, leg 3. So now it's going to come down. Good looking bar underneath if you want to buy. Good looking bar 39, but I would buy the 40. That's the 3 bars, right? So it's going higher, momentum. Maybe they're going to print. Let's see if they can actually print a good looking bull bar once again. But on the hourly, I said we're trying to test the prior hour's high, and that's what the bulls are trying to do here. The only problem here is that this whole area is resistance. You can see the bears started to sell, got a really nice 2 legs, 3 legs down. That's a 1 leg pullback, 2 leg pullback, 3. So we know there are some sellers here. Here's a leg 1 pullback, leg 2. Bulls are still trying to push higher, but sellers probably somewhere here. So there's still room to the upside, but is it limited? That's the question. How limited is it? You got an inside, outside, inside breakout mode, 43, 44, 45. And the 45, the fact that it closed really nicely strong is there's already buying the close of 45 with a probably stop underneath 44 or 45. And they're trying to go higher. But if you haven't bought here and you didn't trail, or if you didn't buy here and you didn't scalp and move your stop underneath, I wouldn't put the stop underneath 44, not just yet, because if you do, there's a big chance it can come down and get your stop before they go high. Because we did not take out that high, we did not take out that high. This isn't a good stop place. This is a minor pullback, minor higher low versus major higher low. Your stop should be here, and you're going for a 1-to-1. It's too high also in the trading range. So you got to think of your risk reward as well. You got nested wedges on the oil, 1, 2, 3, and 1, 2, 3. So the bulls are trying to get to the bar 46 high on oil, or to the EMA. Bears trying to keep the gap to EMA open so they can keep selling. I like to see a bull bar here. Take out the 45 high and 44 high and just go higher. Let's see if the bulls are going to be able to get that. If the bulls are going to be able to get that. First target for bulls is 45.55, and then extension to 57. Well, if you're having a swing entry, if I see a good pullback and a follow through bull bars, I'll just get in whatever I can, with a best price. But when I'm doing a swing entry, I look for a good pullback and buy with a limit order. So bears could not close beyond that break-even point. Bulls are still trying to get back to the 42 close and high. I'd like to see another leg up. What happens if we get a bear bar? Leg 1, pullback, leg 2. I'll think about that when I see it. Right now, bulls still trying to push. But can the market suddenly turn bearish here or start a swing? It might. But where's the second bear bar? So I like to see one big bear bar taking out the 45 low. It didn't, but now you have possibly, if that's the case, maybe the first sell, second sell. Now the bears are getting serious here. If we take out the 45 low, they're going to try to first take out the 44 low, then take out the 38 low. But we need to move below 49.25 first. So I'm just not going to sell this until bears actually show me that they can move under 49.25. Because it is a triangle and it could be final flag, and we might need to break out. If we do break out down here, it's also a triangle, so it's 50% chance it could reverse right back and break out from the upside and go to the target. So this is too dangerous. It's squeezing. I need to see where it's going to break out, whether it's going to get follow through, selling or buying, before I even do anything. This is the apex. I'm just not going to do anything. But if you're selling, you want market to come down to 39 low, 38 open. But there's a chance it might fail and fail to take out the 38 low with a bear body, then go up. If it does take out the 38 body and say you sold underneath 46 because it's an inside bar. Inside bar is failed breakout, another inside bar. So the bears are selling looking for a swing low. Now, that's fine if you sold it. You still have to take profit somewhere here because limit bulls are living here. But say you took a profit and you still have a runner, then wait for market to take out the 38 low. If they do that, you can also sell the pullback because that's going to be a bear flag. But first, we're stuck in this triangle. No breakout yet, and it could fail. Bulls looking for one more flag. So here is a flag. Here is double bottom, higher low, bull flat, which is a form of a flag. And then it goes up, right? And now it comes down, making another flag in the form of a triangle, contracting. So it's very dangerous here. I like to be absolutely sure there's a secondary buy zone here, and it's bouncing. Bounce one, and they're trying to bounce for a second time. If the bears observe all those buy orders, if they break it, then I want to see a much bigger, major buy zone. They could sell all the way in here. First bounce, then the second bounce could start some kind of a bigger flag, okay? So, but first, bears need to show me. This is why it's dangerous, because if they cannot observe all those buy orders, bulls then win the fight, and they squeeze out those bears out of that triangle, and while you're selling, they end up going higher. And that becomes the fake breakout, and they trap you, and as you're going this way, they're going that way, and it could go very fast, and you may not be able to close a bad sell. So just wait for the breakout test even. So it could come down, get back up, and then sell. This is still the bear target. This is the target, and this is the target. But first they have to conquer this triangle, trend line. Bears want to bring the market down to 45.40 area, maybe even 39 area. But they need to show us a good bear bar. Really nice bar. It's a Morobozu. It doesn't have an upper wick or lower wick. It's a brick, I call it, a brick bar. Strong bear close. They're going to sell that. But so they need to bring the market down to 47, 45, 47 bears. If they can do that, then yes, they will keep selling into 43.50 area, 44.50, 43.50, further down to 45.41 area. Some put a sell order underneath, but that's two legs, leg one, leg two, and you got this going on here also, which is a trend line still holding. So if you're selling, you're taking a small risk with looking for a bigger reward all the way down, maybe to here is, that's what you're looking for. So keep the risk small, and because if it fails, bulls, this is where the bulls are trying to go here, and they're trying to trap the sellers. But anyone sold underneath 46 had a little scalp there, but that's not enough. Needs to sell more. So if this is a breakout, that's a retest. And let's see if we can get some bears here. If bears start to sell, they're going to have to take out that neckline. They have to bring the market down to 45.42, 45.40 before bouncing, or at the minimum 45.44.50. I'm sorry, 45.44.50 or 43.50, like I said earlier. So the 15-minute bar needs to close bearish. We need another bear bar after this. And bull's not letting go. But yeah, this is why it's a flag. It's also another flag. Look, it's a bigger flag, another flag. The market is deciding. Can it turn bearish any second? I mean, if that's the way that they're trying to turn this into bearish market, it would be bad if this bar actually takes out that Morobozu high. Because people sold the close of this bar, they're going to sell right here. Because you got two bars, 46 and 47. So the limit bears are going to sell there to try to fix it. Okay, so that's what they're going to do. Because they're disappointed. They sold a phenomenal bar, and they're like, okay, we do have two bars here, so let's put a sell order right here. As it comes down, we exit out if this isn't going to come down. See, it went above. So if there are any sellers here, they're just desperate. Anybody who bought above 48, they're trying to get a 1 point. So anybody who is filled around 51, they want to get to 52. But some sellers here, I don't know how strong, their goal is to bring it down to the midpoint of 48. so they can exit out before this goes any higher. Tough. Disappointed bears, they want out. Or disappointed bulls, both again at this low, they might be getting out. So if bar 48 is not getting any continuation here for two reasons. Some of these bulls were stuck here looking for continuation up to the 55, but again exit out if 49 turns into a bear bar. And the reason why 49 might turn into a bear bar, also the bears stuck here selling, trying to sell here. It's really bad location for everyone. So we're going to give a little bit of space, and that happens to be also apex of this triangle. So it's trying to squeeze out from one location. Since the market is bullish, right? Bulls are trying to get to the higher prices. Now it's 130. It's bar 48. Can the bulls get another 6 to 12, maybe even 16 bars all the way up here? If we start the swing, yeah, they might. But can they actually sell and get that many bars all the way down? Has to be a trap of the bulls. And it needs to show us really strong bear bars here. So bulls trying to reach the 56.25. That's their 10 point. We might get a third push, touch of the trend line. If we fail to break above, we could also reverse right back down. So decision has not been made. It becomes very dangerous here, and I don't like to trade these kind of setups. When I see a triangle like this, might take that, give or take. Okay, that's the trend line. That means we do not have a breakout. These bears need to exit out. They need to bring the market down one more time. If they fail, they're not going to sell all the way up here as bulls get their breakout. Another good looking bar, 48, they bought it. And they're looking for 1 point. So if you enter 51, like I said, bulls need to tag the 52.25 to give everyone a 1 point, one solid point, since ATR is 125. So market is saying you get a point scalp there, and that's about it, unless you get a breakout. So that's around 52.25. Can we get another wedge top? Oh yeah, if we get a wedge top, that's bar 50, and they could start to sell very quickly. But first, bulls need to make that point, see if they can actually tag 52.25. If they do not get that 1 point, buying above 48, then we know bears will start to sell. I'm actually surprised they didn't start selling here. So that means 52.25 is still the target. So it has to hit 52.25 to give them 1 point. That would be 5 ticks. Okay, upward trend line test. That's a good place. Maybe bears to put a sell order there. But no bear bar. No one's going to sell anything. small wedge, bull flag. Bull's trying to get to the 44 high, break out and test here. If there are any bears, it's got to be here, and that's to bring it down as much as possible to break even. If you sold here, maybe sold at close, your break even is right there, 50.25. And you see how they're trying so hard to get there. Some already sold right there, so they sold a little bit more maybe. So break even is somewhere approximately there. And it's also the trend line, like I said. If there are any bears, they're got to be at the trend line, and they're selling. So let's see if we can get, and that is break even to the tick accuracy right there. And if the bears actually close the bear bar, then they can bring the price all the way down here. That would be a double top, lower high. Can we come down to the 38? I need to see a bear bar closing below that break even point. A bear bar closing below that break even point. Well, that didn't close. But you see how that worked out? So. Is there any news scheduled? Let's see. Nothing. Okay. Market is deciding. Bulls want to go higher. Bears want to bring this down pretty strong all the way to 45.39 area. But I don't know. They haven't really trapped the bulls yet. Bulls buying. Get back to the 44 high. Get back to here. And they have to close above it. This trend line. That's still the target. Bears must be exiting. If the area is too small, I don't bother. I mean, you mean like selling with the bears? No, because market is trying to get up to here, so. There's double top here, but I think the bears are trying to break above this double top. Market could reach 45.58, 58.25. Doesn't need to stop at 55, but that's because there was evidence here. Some sellers maybe 2 points above, around here, waiting to sell again, or 5 points. That would take us to 58.25, 50 area. So we may not stop. We might actually finally test this, get above it, and we could continue to go higher to 58.25 area. The bulls need to break this high, and that's a micro double top. So they need to break that and tag the. So I went long, and once I saw that break even failed, I just bought and went long. And I am scalping. I just scalped one tick below the 55 just to get filled. And the reason why bar is coming down because I'm taking prop. Now I'm just joking, obviously not, but many machines know that this is an obvious target, so they start to front run one tick before it reaches, kind of like playing with people's emotions. And I've seen it so many times. I'm not going to sit here with an exit order. I think I'm just going to like, get filled one tick or two ticks under and just get paid, So that was beautiful. Excellent. But it can break above and continue. And in fact, I think the 45, 58, 58, 25, 58, 50 area is where they want to reach. High of yesterday, projected targets right there. These are all targets, but we need a bull close above this level. Bulls can buy a pullback. If it pulls back, buyers here at the breakout point 44 high, or they're going to keep going higher. So around 45, 53, any pullback, there might be buyers there. But it's a steady climbing. I like to see 55 tested fully and one tick above at the minimum. If it's going to fail, then fine, just go test it and then fail to close a bull bar and a big bear bar. It might pull back, but really nice buy to close. It actually jumped at the open, so the bull's still trying to reach places. Can it reverse here? What if we reverse? Could this be a fake breakout? I like to see this tested first. It's a breakout bar 52, trying to get a follow-through bar. If the follow-through bar ends up closing bearish, I might say, okay, this was a dud, but it's just not yet. I cannot judge this bar just because it opened lower. It could be, hey, buy the quick pullback and keep going higher. So I think the bulls are going to keep pushing. Their next target is this and above. Okay, so it's coming down to 45.53. Like I said, there might be some buyers here. And bring the market back up to the 55 to 56. Or double the ATR. So that's 53 and 4. Yeah, 57, 58 area maybe. Second leg up, kind of a bull flag on the hourly. Trying to get back up to the highs again. When do I get nervous about bulls? When do I give up? If they come in and close a bar, bear bar, below 45, 50, 50, 50, 50. If they start to close a bear bar, then there's a wedge top here. 1 pullback, 2 pullback, 3, and a double top, lower high, maybe. But I don't think it's ready to sell yet. 45.53, some buyers, pullback buyers. They're trying to push the price about 2 points up. So that would be 55. Double the ATR. 57, 58. But it's too high to buy, obviously. This is a good breakout, follow through. that is now a little bit scary because it's an inside bar. Bears want to take out the 52 low and they want to reverse the market down. Some bears are already selling this inside bar with a stop above it, but I think there are limit buyers here from the close of 51 to the high of 50s. They might trap the sellers and we could go higher again. So, or they're just going to buy this inside bar lows and they're going to go and run the stop above the inside bar for those bears trying to sell. So if that's the case, we would accelerate very quickly above the 55. So bulls got maybe another 2 bars to get the market back up to 55. If they fail, then I will give up on the bulls. So first bar, 53, second bar, 54. They can still find buyers here. Some bulls will start the exit underneath 53 because it is an inside bar. It's a bear bar. It's kind of closed really nicely. But I'm not going to do that because I can always buy down below and break even with my runner. Waiting for bulls to show up and trap these bears trying to sell. All they need is a strong bull close with 54. Bulls trying to reach the 55.75, then further up to 58.25 or 58. Market failed to turn into always in short. Bulls took over, trapped the bears. Majority exited out here, so you can see that we squeezed those bears out of the market. And we have a strong breakout, pull back, and I said they're probably going to buy it, although the bulls are not showing up strong. But I said they have about 3 bars to figure that out and go higher. If that fails, then I would start to give up on the bulls, but I have no reason to give up on them just now. So I said 45.53 they will buy, and they did. So now ATR is so tiny, but they're buying the pullbacks. It could be a sign of steady buying and keep going up. There's no volatility in the market. It's just steadily buying the pullbacks. So expecting is 55.50 to be tagged. I'm sorry, 55.75-ish. And continue to go higher to 58. Can we get a second entry short here? 54 moved below the 55. I'm sorry, 53. There were people selling underneath that, but why would you want to do that? This is obviously trying to get another leg up. This is possible final flag maybe. So it has to go up and give us at least a double top or something before, and then second entry short. So I'm just not going to touch it until it shows me a second entry short with a strong bear bar. Otherwise, it's just going to go higher. Bears trying to get a second entry short here. Double top neckline 54. That would signal me perhaps of issues that the bulls are having. But remember, I said they need like about 3 bars to keep going higher. This is the third bar. Or you can say maybe the fourth bar. I don't know. I just don't want to sell anything here unless I see strong bear bar taking out the 54 low, closing really, really strong. Because there is a wedge here. And this is the trend line. Bear is trying to break that trend line. Now, we either squeeze out of it or we squeeze out, trap everybody, and then reverse back down. So I'm going to have to do the scan. 1, pull back, 2, pull back. We're still on the third push. Okay, so technically a second entry there. Bear's trying to break that trend line, but they got to take out that neckline, 54. I didn't sell anything. I need to see the wedge broken from down below or up above. I'm still in my long. I'm still looking for higher prices. I just didn't really care to sell anything or exit out of my long. Definitely painful price action, let me tell you. I'm just replying people via private messaging and posting stuff, but just bored. I think so. I think they're still trying to reach. Let's see where that is. Yeah, that's about 58.50. 58.50 is the 30 point. I did really good with the oil this morning. I was calling a bunch of targets. Really nice swing, small pullback bear trend. Oil is 7 right now, but they're trying to reverse right now into a bullish move up. Oil doesn't stop at 230 anymore, does it? It used to be 230. I think oil has a maintenance hour for 1 hour. Otherwise, it's 23 hours a day. Exactly. They're testing out my catamaran. Yeah. I was looking at over the weekend, just for shits and giggles. You know, if I can just go rent catamaran, how much would that cost me? And then so I just asked the question in one of those sailing Facebook groups, closed Facebook groups. My gosh. Suddenly everybody's sending me their menu items, telling me that it's going to cost me this much. Basically, you have to have just about $15,000 for a week. But you can have it to yourself. Or you can find 4 or 5 other friends to come with you to divide that 15 grand. And that's for a small catamaran, around 40 to 45 foot. Anything more than that, like it just goes like 20,000, 30,000. Holy cow. I just want it to myself so I can actually hog the captain's time and learn everything. You know what I mean? That includes how to fix the engine. Like, this is how deep dive I want to get. So it's, I'm seriously thinking of doing that. I just don't know if timing is right, but it would be really cool. And somebody said, look, listen, you can buy your catamaran and then you could hate it like a month later, maybe a couple of weeks later. That's not the life for you. So why do it? Just spend your first year renting out a bunch of catamarans. Really get to the nitty-gritty and see if you actually like the pain of maintaining any kind of floating vessel. It's actually a good point. I mean, God knows, I could get, if I don't trade, I'm going to get super bored. Imagine. That's not good. So I might need to think of these things before I even getting that captain's hat. We'll see. Roger, what are you going to advise me on? On the financing of the catamaran, perhaps? That I would definitely need your help. First of all, I wouldn't even buy anything without even getting you on the phone with those, money mongers. You have to be there on the phone with me, financing this thing. I'm not touching anything without your advice. I'm still waiting for these bulls to break out. It's really annoying. There's another wedge, nested wedge. So 31 high, 52, and the next one. So if we can actually trap, we could go one tick above this high, and if we can trap the bulls, that's fine. We could just go up and then come back and break out from the lower trend line. I don't mind selling it, but right now I have a long target, so I want bulls to get us to the 58.50 area. That's what they say. It's the first happiest day you buy it, and then you sell. No, first you get married, I think, and then you buy a boat, and then you sell it. It's like the happiest day of your life. That's what I heard. Yeah. It's expensive, for sure. Actually, I met one of your members here. I'm not going to give the name, but regularly renting monohulls, really expensive ones, for like 30 days and sailing. I think it's a much better idea. I don't know. We'll see. Right now, I need to meet my target so I can actually pay for the first down payment or a dinghy. Okay, so we do have a breakout, but the bar didn't really close above 55. I want to see continuation, at least the 58.50 area, but let's see if we can get there. And for scalpers, they're trying to get to the 55.75. Or 56-ish. If this turns out to be a fake breakout, because we have nested wedges here, might even have 1, 2 undershoots and 3. Bears can still sell this if we cannot get above that 45.55. But we want 1 tick. I think it's a 1 tick above. Yep. To me, this is from this high. It's a fake breakout. Only if the bar closes bearish. Otherwise, we're still looking for continuation further up to 58.50 area, which is 30 points. So that's the problem for bulls. But I still don't want to exit out of my long. I'm still looking for a breakout from this tight trading range here, because bar 57, it's a strength bar. Why? The bull bar closed on its high rather than bears getting a second entry sell there. Technically it was, I said, and they failed. So they closed that bar 56, then 57 became a strength bar, but it failed to take out the high. Next bar did, but that's a failed follow through or failed breakout. But doesn't mean that it's not going to break out. It's still trying to squeeze out. So until we try for the second time, trying to get above the 55 and we fail, then I'll look to exit out. Otherwise, I'm just not interested, because the second try, bulls can complete, okay, the breakthrough and then close the bull bar, then we would get to the 58.50 quickly. If I start to see bear bars taking out the bar 57 low, okay, or let's see, is that, yeah, 57 low, it's a strong strength bar, then I'll think about exiting and maybe selling with strong bear bars or underneath them or close of them. I just don't care right now about the bears. Beautiful. Go Bulls. Oh my gosh, that GIF, stones. Come on, Bulls, get going. Perfect. 58 to 58.50 is my target. We're already above the 20 points, so bears couldn't even make a 10 point. So this trend, bull trend, is intact and always in long. We're about to test a 30 point, which is 58.50. See how that worked out? Oh yeah, this is great. Keep going. Don't give up here. They make the dinghies like they are wave runners, which is great. You just get a more space for other people to sit, but it's like, it feels like you're riding a wave runner. I want to get one of those. That's a toy right there. This should buy it. 58.50. Go test. I'm just gonna scalp the 58.25 just to be sure. Here comes my dinghy. It is a big bar. Strong bull bars. May want to get continuation. Probably a small leg or so. So I still think that the bulls will try to get to that 58.50. And this pullback, no bulls will be happy with this. So they will buy. Maybe somewhere around 44. What is this? Yeah, somewhere here. They're disappointed now. They're going to buy down here, and they're going to look for reversal back up so they can break even at least. Well, profit taking began right away. That to me is a micro double top already, which is kind of upsetting, but there's a little bit more room to the upside. I think it's just, it is a big bar, so many bulls are taking profit, and it's the wedge top. But as it comes down, they find support here probably, right at the trend line break. So probably some buyers above 58 buying, or the lower 1/3 of bar 59, which is a bull bar. If you divide it into 3 sections, because it's a big range, okay, maybe here, well, that's not really but if you actually divide it, this is where the buyers are. So a bar like this, it's going to try to buy at the midpoint or lower 1/3 and try to get a break even. And that break even could still continue to bring market up. 58.50, that's where my dinghy is. We're going there. We better get there. So I'm going to hang on to this and not get shaken out. If we get a strong bear bar, and the bulls cannot actually go beyond the high of 59, suddenly we get a strong bear close, taking out the 54.75 or so, or 55. Okay, so I don't know if that's 50, what is it? No, that's 55.25. So if we take out this area with a strong bear bar, So we get a 2-bar reversal. Before seeing that 2-bar reversal, I am not interested in selling anything. $58, $58.25, $58.50, $58.75. These are all targets. A bar like this should get continuation, even if it's a very little. This hour is trying to reach up here. I'm going to see this lower trend line break with a bear bar. If they do that, we could start to sell into here. Maybe to bar is 48 lows, 51 lows, open, whatever, maybe even here. But before that happens, I am still bullish, still always in long, still trying to go high of yesterday even, magnet, and the projected target, we could accelerate into that. Okay, so this price action, it's really annoying. Oh my goodness. But it's steady. I mean, look at the ATR. It's telling you that it's just keep going higher. So don't just give up just because you see a bear bar. At least wait for a really strong selling, then you sell. Don't be the first to sell. I'm still long. My stop is down here now. It's a tight stop. I'm not messing with that because this can, if it starts to come down by failing to test the 30 point, that's fine. I'll just exit out. And in fact, it can actually pull down to the bar 59 low. There's still buyers there below the 59, somewhere around 58, 58 lows, 57 low, 57 open. There are buyers there. I think it's just going to kick me out. That's okay. I welcome that because if the bears start to sell very fast, I sure don't want to be in that long. We have a breakout bar, so it's only okay for me to. You can put your stop underneath 56 because that 56 or 54, it might come down and take out those stops and then go right back up again. But it may never test your stop. So you would be still in the long. Because it is basically the higher low. So that's the qualifying higher low. This is not. Okay, but don't be upset if suddenly bulls give up and the bears take over 3-bar reversal and then comes and takes out your stop. Now you lost all that much as well. So you have to make that decision because there is a solid breakout and failed follow through. So you know it's trying to come down. It tried to go up a little. Maybe it's failing. I don't know if it's failing yet. Because if this bar suddenly closes on its high, well, it didn't. So this is kind of a 3-bar reversal now. They're trying to come down to here. So maybe it's okay to keep the stop there. 3 inside bar, failure, and then the 4th bar after this could be a bull bar. It could run your stop with 1 tick and then go right back up, okay? Just like inside failures for big bear bars with bunch of bull bars. That's not what I want to do, but whatever. It's just, sorry, the 2 tools don't work together. So you have these, okay, then you get this big bear bar and then it sells. So the similar thing happening for the bulls, bear bars, 3 inside bear bars, people sell these, and then suddenly it just goes back up. Okay, so similar thing might be happening right there. In the meantime, I messed this one up. Out. Okay, they kicked me out now. I'm out. Anybody is with their stops underneath 54? That's minor. That's major. Also in risk, but if bears get that bear bar, the first pullback they are going to sell with a second leg and a third leg all the way down to the 48 low or the 51 open maybe or low. 3 bear bars, expect sideways and down, but first they need to take out this trend line. Could there be any buyers here? Yes, like I said, it's basically 3 inside bars with the last bar failing to close a bear body underneath the low of 57. Suddenly you get this big lower wick, but the bar closes inside the range of bar 59. I'm sorry, I said 57, I meant 59. So then you get a bull bar. But if it closes like this, then expect sideways and down, probably. Can there be buyers at the EMA? Oh yes, limit order buyers. 2 bull bars, 51 and 52. They already bought the pullback, so I don't know how many bulls left here. So it might end up coming down here. That's what I want to do. See this just interfering every time I touch something. No, there. So it could just come down here, sideways, and then down. If that body closes like that. Or could this be a failed breakout? They sold already, so the bears are making money here. Their target is 51.25. And if they can close beyond that, they can push the market down to 48.25. But what if they come down to here and test underneath but fail to close a bear bar? Well, sideways and down again. It's going to bounce, probably retest the breakout point, which is this trend line, and then sell. Market is trying to get down to here. So I'm flat. I didn't do anything. I didn't sell it. I had a opportunity, but my stop was here. So they're around my stop. I could put a limit sell, wait for this to go up a little bit, and then sell. Or this is going to keep selling. But I think first it needs to pull back because it's a trend line break. And then look for a second leg down to that 6 point and beyond. Strong 3 bear bars. These bulls are disappointed. So they're looking left and they're looking for like 2 bull bars. There's 1 and 2. Probably buyers here. So they're buying, they're trying to get a break even before this comes down with a second leg. Okay. So if you're disappointed here, say you bought the close, then you buy again, maybe right there. That is the break even right here. So the bulls are desperately trying to reach there before the second leg begins. So it ended up being an exhaustion bar, but again, how exhaustive is this? How would you know? Well, if the bear is able to make a 6 point and more, then yes, then we could get a counter trend or reversal 10 points, maybe even 14, 15 points down here. We might actually test the 38 low. We might even come all the way down here But if they come down to the 6-point area, not able to close, and it reverses right back up again, don't be surprised. It's a pullback, and we had a pullback like that. Everybody thought that bar 30 was maybe exhaustion. Look at the reversal bar, inside bar, outside, inside, another, well, that's not inside. But look at the sell. That's 3 legs. So it might make 2 legs, but that not necessarily mean that it's going to sell. Bull's trying to get to here. I'm flat. I did not do anything because if I'm going to sell, it's already selling. I just need to look for a pullback, and then I could sell. There might be probably sellers. When this bar closes, some bears will sell above that bull bar probably, but they have to wait. Some bears, I meant. But they have to wait for these bulls to at least try to get a break even. If they fail to get a break even, those bulls can give up and we could sell further down. But first I have to wait because that was a legit limit buy area. Can markets still get back to the 45.58? If bears cannot establish no more than a scalp here, meaning if they cannot close a bear bar below that 6-point mark, we can still get back up to the 45, 58.25 or 58.50 area. Really nice, kind of an endless pullback. Keep buying the pullbacks, even if they're deep. Bulls are able to fix their problems right there. So like I said, anybody put stop here, they were slightly safe. Okay. Those bulls just got their break even. So they're selling above the bull bar here, but the bull bar is extremely strong. It's an inside bar. When a bull bar has no upper wick and it closes like that, I don't sell it right away. It's kind of learn to filter these inside bars because anybody stuck here, now they're buying the close of that bar and their break even is here. They want market to get to here. The retail is now buying because they have a really nice qualifying inside bar. They want market to get to here. Other bears, they want sideways, sell the first pull bar after 3 bear bars and then get a second leg down. So to bears, this could become a small bear flag if this bar closes bearish enough. Other bulls, both here, maybe both here, because they saw bar 63 is decent and they could get their break even. They might actually scale in even more somewhere here and get their break even. But strong bar at 63. I'm gonna wait for the second bear leg to be over before I buy anything again if I'm going to buy. Bear's trying to take out this bar as low, get back down to here, maybe get a double bottom with 62 at least. So the second leg needs to breach below the 63 low. But these retail bulls did not get a break even yet. So I am not selling 62. It's a pullback. Okay, so bulls trying to go a little bit higher, maybe the 50% of this bear leg, which could bring them to the break even. Bears try to sell, and look what happened with 64. So if they were going to sell, they needed another bear bar. So if they were going to sell, they needed another bear bar. That's because bulls trying to get back up here. Sideways, I need a bear bar. Really nicely taken out the 63 low. And then the market is going to try to get down to the 6 point, and furthermore, maybe 10 point. But if I don't see it, I know exactly where the market is trying to go. So there's no need to rush this. Oh my goodness, why is this so slow? What's going on tomorrow? Retail sales, 8:30. Industrial production, 9:15. Business inventory is 10. Housing market index, 10. Market index, 10. Yeah, so we have a bunch of news in the morning, but nothing after that. Bulls reaching that break even. See, this is why I didn't care to sell. That bar said there will be buyers one tick above 63, and they're going to get right to that or to close. And the bear is showing you no one's selling that bar. That's a break even right there. So I wanted to see that first. So bears failed to break the channel. It's trying to get back up again. It's kind of a lopsided inside failure, 3 inside failure. My only problem with this is that it could create a head and shoulders pattern, wedge top maybe, or wedge top here, because it took out that bull bar's low. Even though the limit buyers were there, it could get exhausted here and still it could sell. It's just that look what happened with that bull body. Closed at the break even. Immediately some bulls exited out. They were happy. Now if we get a bear bar, we could still get that leg down. But now that the bulls got it, maybe there is a head and shoulders here. But still, you see, we couldn't even reach the 6 point. This is not a counter trend, and it's failing. Bulls are still trying to get back up to the highs. They still want to get to the high of yesterday area, 58.50 area, maybe even further up. I don't know. We'll see. There's a that right there is measured move on the Globex, right? Yeah, so market is still pushing for the 45.59. Bulls are back in, so they want to keep going higher. I'm still flat. I didn't care to buy. I guess I traded so much today that it just kind of tired me, this price action. But now they're doing whatever they can to get back to the highs. I'm flat. I did not buy, but there are others buying the close of 65. They're trying to get back to the 58.50 or maybe even 59. It's just too high for me to buy here, I think. There's not much room. Maybe 3 points or so. Maybe 4. Just about 3, I think. Kind of, because I'm lazy. It's too high for me to buy. So there's a 2 legs here already. And there could be sellers waiting at the high. Here's leg 1, pull back leg 2. So we know there are some sellers waiting here. There's 1 pull back, 2 pull back, and possibly 3 legs already here. Or it's going to come down and make a 3rd push and a fail. So I didn't want to buy into that. I wanted to see the break-even attempt, which they did, which is a good thing for bulls, but this could still sell. So it's a little bit too high for me to get into a long. I'd rather to look to sell. But I also want to see bulls finish the job. But here is a bull bar back above the 45.55. This did not get a consecutive bull bar. If this fails, then we sell. But if this bar, if you're selling this, and suddenly this bar 66 closes bullish, you get 2 consecutive bull bars. Bulls can gun it all the way up very quickly. There's that problem because there's a much better area above to sell than selling right here. So this is an important price. We keep coming to that, right? So look, we broke above it, no consecutive bull bar, so we didn't continue. We broke below it, but no one sold. Now we're above it again. Okay, now we're below it again. It's a mess. I'm not touching this. It's still trying to go to the 45, 58, 50, or the measured move, 59. Market is making higher lows and higher highs. So we're still in this bull channel, and it's still trying to reach places. But we do have a wedge here. 1, 2, 3, 1, 2, 3, lower high. I don't know. Maybe we could get 1, 2, and final 3rd push, and then we could sell. To me, this is dangerous here. I'm just not going to touch it. I'm flat already. They run my stop, so there was a little bit of loss there, but nothing. Oh, wait. I don't think I've lost anything there. Let me see. Hold on. Data series. Plot executions. Text and marker. Nope. I didn't lose anything because I managed to move it up. So it's, well, it definitely ate into my P&L, but who cares? So I just, there's not much. If I see another bull bar taking out that high, but again, I don't want to buy because here is pretty much resistance now as we get closer to the 59. If you're still long, just hold it a little while until it gets to the 59.50 or 58.50 to 59 area. And then look for maybe a reversal from there. Bulls trying to get back to this high, make a new high, and continue into 59. And here's the thing, this may not be, this would be actually the measured move. So we could keep pushing higher. Because there's that leg there. I could maybe use that. Then that's a much better. Yeah, so I'm trying to get the bull bar. to bull bar, 64. So we can actually accelerate to 64, which would get us to this level. Sometimes I get fatigued around this hour, and if I make enough money, I rather read the price section rather than taking a bunch of trades, especially if market runs my stop and I kind of am volunteering for it. That means I'm depleted. I'm just too tired. That's one of the things that is in the afternoons, you know, it's hot out there. And I think my lunch was way too heavy. I made gumbo, shrimp and sausage, chicken sausage gumbo. So that wasn't a good idea. I should have never eaten that. So I feel a little bit fatigued. And even though it's going, yeah, I'm leaving money on the table, but listen, it's better to read for me and sit on my, you know, nicely built P&L all day long and read the targets. And you guys make the money, I'll be fine. Oh, that's right, you do, Stone. My gumbo is not like the gumbos that you eat. It's a fake gumbo, but somehow it tastes alright. I try. Come on, bulls. Just don't make a double top here. Just go a little bit more. I think this is what I measured, which was 59. I think this is what I measured, which was 59. So either or, they're still trying to reach. So this is, I'm not interested anymore. I'll remeasure it if we start to get bear bars taking out the strong bull bar lows, or we start to move underneath the EMA. I'll quickly look for a 6-point and a 10-point and a 15 and a 20-point. Maybe the test of 38 lows, but I don't know. Leg 1, pull back. Leg 2, pull back. Leg 3, or first correction, second correction, nested. So bears really need to come down and break these to get down to here. But you can see, even though we don't have a consecutive bull close above the 55, bulls are still trying to make that new high of day. See, look at the bar, the new traders. Remember I said there's a bull flag here. Look at the bar 47 and 48. What I call this a kicker. When the bear bar is so strong and a suddenly bull bar kicks like that and closes, that's because this is the bull flag pull, this is the pullback, and a second pullback is actually testing 61.8 area. Do I even have? Let me think. Let me try something here. Oh, here we go. Yeah, it's called a golden zone. So it's testing 61.80 to 50% area. Okay, so and it goes up, and the buyers are there. So that's it. Or you can do it the other way around. Generally, this is what I do. I like to see the 61.80 below the 50, and it closes like that. Just buy above it and go along. This is the target. This is where they're trying to reach. This right here. Okay, so and they can still accelerate and get the measured move target. So this is definitely the target. I know you guys don't like to use fibs, but this is perfect this is the golden zone. It's perfect for any kind of flag and where to buy and sell. For the bull flags, you want to see strong push up, come back down, and go long. So first target shallow, and then the second target. Generally, this is a good target. Or if you're looking for continuation into measured move. And for really big breakouts, you can even get these levels, but we'll see. It's trying to reach here. Double top though. We did not take out that high, becoming very persistent, but we are so close to that target. Waiting for bulls to deliver. 59 is first shallow measured move, and furthermore up with this bull leg. I measured some quick pullback, and a follow through is leg and a pullback, another. So 64 is the next, and that 64 is somewhere here. So we could actually keep going higher. We'll see. What if we can't? I think we should test that 59, or at the minimum 58.75 area before coming down. So bulls should continue this another 15 minutes or so, maybe 19 minutes. And then around 3:30 p.m., we might start to sell, who knows. It's still always in long, still trying to get here. Last week's high is magnets, which is 60.50. There's resistance here. I want to see how the market is going to react to that resistance. We're still in that resistance, but we're kind of reaching. So I want to wait for these bulls to deliver. And somewhere between the 59 and 61 area, I want to see if I can actually sell. I'm going to be looking for a strong bear bar. So bulls can still take this all the way up. They're getting closer to the 30 point, which is 58.50. Is add another 10 points, 68.50 would be the 40 point. We can get to the 68.50 today before selling anything. This could keep going on and on and on. Look where the 68.50 is, slightly above the 2-to-1 target. So it's still going higher. But I'm going to be looking for sellers or profit takers first with this bull channel somewhere around 59 to 61 area. But if bulls actually go into that zone really strong with bull bars, not going to look for anything to sell. It has to show me because this is still going higher. Good place to pay themselves right here. So target met, but it's not enough. I think they will try to go a little bit higher. 60.25, 60.50. If they can start to accelerate, 64 measured move target on the Globex. Just look at the screen, the left side of it. We're just there for the early measured move, conservative measured move. Sometimes when market is in a bull trend, sell zones, look, they have been breaking the sell zones. Look, this one sold, failed to sell. They bought in the buy zone, broke the sell zone, and keep going higher. Look, they broke the sell zone. The next pullback, they can buy again and keep going higher. So if you sell, you might make money. But if it doesn't continue to sell, you need to be able to scalp. So you may not get a good swing sell, but you might be able to get a decent scalp. You just have to decide, will you be happy with that couple of points? I don't like to do that. I like to actually see a sell signal bar and then sell underneath with a sell stop order as I can trail. Still bullish, still going places, still trying to get to the 60s, maybe even 61 area. Yeah, I don't think, there may not be a sell-off. It could be just a pull back into this area. We'll see. It's still pushing. This is the next target. But they need to close that bar in 3.5 minutes above the minus 61.80. Suddenly they close a bear bar, we could start to pull back down because we do have a wedge here, 1, 2, and 3. 1, 2, 3, or 1, 2, and 3. Okay, did we just test my target? 58.50, yeah. So that is 30 points right there. Good job. That's where my dinghy was, and they kicked me out, so no more dinghy for me. We could still go higher. There's the 59 target. We haven't really tagged. Wait for this bar to close. If bull's able to close above that, 58, then they can push higher. Yeah, this was just, I don't know. I could have bought above this bar, or even maybe buy the pullback. I just didn't care to buy because I'm just worried about this right here, 59 to 61 area, or yeah, or yeah. Pushing up a little bit more. I think he wants the 59.50. That's where the sellers might start to show up. That's what I'm worried. But it is nothing but a buy the pullback kind of day today. So if you're going to do one thing, either flat or buy. So that's an acceleration right there. And they just reached the bull flag target 1-to-1. See, that was beautiful. So that was 60.75. I did say between 59 to 61. So they didn't really tag the 61 one tick failure. But look how great that was. Now, what if they close above it? Can they accelerate? This is the target right here. They're accelerating. Nice. So that means they're trying to get to my measured move target 64, which is either here or there. Sheesh. Now that is the biggest bar. That right there, wow. Just wow. Now I regret for letting go. Holy cow. And I even knew I marked it. See, now I feel like a loser because I let go. But just so you guys feel good about me, I only made 20 grand. So I'm happy. I don't care. I made $20,000. So to me, this is victory because I was right about my target. This is still always in long. And here is your golden zone buy and swing. And kept buying and buying. So I'm perfectly fine. So don't feel bad about me. Don't cry for me, Argentina. I am doing great here. But I did feel like a loser there when this thing started to accelerate. I'm like, oh, shoot, man, I should have gotten right here, but it is what it is. I just feel very tired. So, but hopefully you guys made the money. Now, what happened to that sell zone? It is now a buy zone. Basically, if market pulls back there, there will be buyers waiting. It is now a support. So this means market is trying to get to my 40 point. 40 point is 68.50. I think they're going to try to get theirs, and they should be, this is a big bar, it should get a little bit more continuation. 40 point for bulls to complete this big ticket item is at 68.50. They don't need to stop there. Once they test the 68.50, a little bit of pullback could generate another 10 points to the upside. But it's a big breakout of a sell zone, and it might act as a buy zone. It's pulling back to the 50% of this big bar. Probably buyers there, starting at 60.50. So don't be so excited about selling this unless it becomes a one big huge bear bar rejecting this 70. I doubt it. I think price is trying to get above it, get to the 200, which is 1-to-1 and 2-to-1 target. But we no longer need this. So I'm going to mark the 40 point for you. 68.50. That is the 40 point. They're testing where they broke that we talked about being a sell zone, but they broke above it so strongly. Now any pullback, there are buyers waiting there, which happens to be the 50% of this bar. So if there are limit order buyers there, then the stop order buyers are sitting above, and they're waiting for their turn. They're waiting for market to now get up there. As this bar goes up, limit order bulls make money, and stop orders will wait. But this is a projected target. There's a reason why we call it projected target. This is where the market takes profit. When do you sell? When do you think the market is going to sell? Well, if they breach this and come down to the 33%, okay, so which is somewhere here. Okay, they're right at 33%. And if they start to close a bear bar underneath that 33%, then I say this could become a one big rejection bar. And if we get a one big bear bar closing right around here, market will sell. They're going to try to come down to here at the minimum. First leg, pull back. They can even come down to here. So, but if this bar suddenly closes above the 50%, then big pullback, limit order buyers entering, stop order buyers start to park their orders right around here, and they're going to wait for market to keep going higher. Okay, so watch this 33% area. Any bear bar closing below it, it's going to make it very difficult for bulls. Why? Because when you divide a strong bar, it's a range, right? So in a smaller time frame, it's probably a trading range, kind of. So the lower 1/3 is a buy zone. There are always limit buyers waiting there. Upper 1/3 of this range is sell zone. So those buyers are buying because they probably bought the close of this bar instead of taking profit. Many bulls are taking profit there. So that could be just a profit taking. And the moment that this bar actually finally closes above its midpoint or at the highs, then more bulls can come in and buy, and the stop order bulls will be activated, and then we go to the 40 point. All right, so we have a bar, body close on its midpoint. It's actually bearish, but it did not close below the 50% level. So limit buyers are making money here, and they want to get back up to here. Question is, can they make it? It's the end of the day. There's still time, plenty of time for bulls to actually reach the 40 point. We reached a measured move. What if this is the measured move? Remember what Al was showing you guys? Whoops, that's not what I wanted to do. The other day is, you know, the way that he measures he looks at structures, right? If the market is actually reaching one measured move, then he extends and looks for continuation and another one, another one. Now look, I said this is the 40 point. If we get to the 40 point, we could get another 10 point. That would get us to the 78.50. Look at the measured move on the Globex. That's 78.50. So can market actually accelerate and get us there? Well, let's see if we can get to the 68.50 first. Right now, it's a kind of a flag here. Oh, by the way, I'm glad I just saw this. Brad is going to do end of day review. Okay, so it's Jaden. That's L. Brooks's wedge. I just go a couple of steps further and find targets. It's a projected, so basically that's what I'm doing. Is for bears, I look for a bear. For bulls, I look for a bear channel. And the market is going up, coming down, going up, coming down, right? So it was like this. Big leg, leg one. Pull back one. Leg two. Pull back two. And final leg three. When you connect those, you get a wedge here, right? So it's first pull back. Okay, so starting point. To the second pullback, ending point. I connect it. And when market finally reverses, right, so with a couple of legs, that's where it's going to go. And it's going to take profit. It is called projected target line. So let's talk about that. Look, I have a wedge right here, right? So 1, 2, 3, and lower low. Is wedges can be 4 pushes. They don't need to be 3. They can do a small push or 1, 2, and 3. Doesn't matter. Leg 1, pull back. First pull back. Starting point, ending point. Second leg. Second pull back. Starting point, ending point. And a final leg, lower low, and or higher low, whatever, reversal. So if this is my leg 1, and if this is my leg 2, and this is my correction 2, and this is the correction 1. Correction 1 starting point, projected, connected with the correction leg's ending point, that gives me the projected. But first there are 2 targets. First target, second target. Okay, so there you go. And it kept going and going. So we got the first target, went above it, we pulled back, then we went above it. That's my second, and that's even now became my third target. But either or, if there's a complex leg, so I'm just going to do this again, right? So let's do this. Let's say there's a complex leg. Where is that? Maybe this whole thing is a one leg, pull back, 2, pull back 3. Right, so 1, pull back 2, pull back, third leg is shorter. So if this is your starting and this is your, see, this will be a conservative target. Correction, correction, final leg. I can either take that one, nope, I would take this one. So if you're looking for quick take profit, market is actually getting above it, so there must be something much bigger target. Maybe I need to readjust things. Okay, so first leg, pull back. Second leg, pull back. So this cannot be higher than that. And then the final leg. From that to that. First target, maybe second target. That is projected target for a major breakout. We reached that one, pull back, but we actually went closer to it. So I know market is trying to get to that. It's still bullish market, goes up. Now, how about bears? Now you can use this. For bears, you're doing the opposite. You're looking for a bull channel. Okay, so you're looking for impulse, correction, impulse, correction, and a final. Then from this correction, starting point to the end point of the second correction, that is your projected target for bears. That is your first target, or maybe second target. Since the second target is a lot closer to the first target, so that's your projected. So market could end up selling with several legs down here before bouncing to the upside. It's like a two-sided trading. So now let's do that exercise. We have a leg, we have a channel here. This is my favorite way to trade. If you master L's, wedges, and then add my additional technique, it is called Wolfie waves, you're going to be golden. You can trade, as you take profit with bulls, you anticipate selling with bears. So without even wasting any time. So what do? I'm looking for legs, right? So maybe this is the first leg, pull back, second leg, pull back. This pullback cannot be lower than that. That's the only rule. Okay, so that's it. Where is your projected target? Projected target is right there. Hold on, I can't see. Yep. Projected target is right there. But where's your actual target? It should be a horizontal line. I generally take the bull bar rather than the bear bar, so I'm going to take that bar 63. Okay, so market actually pull down to here and then grab that as well. Generally, it happens with two legs. Sometimes it goes up before coming down. It makes a double top. If the last leg is really impulsive, and then you look for two legs down. If the last leg is not that impulsive, it could just do one, pull back, two, pull back, three in here. Hope this helps. If market wants to give you the target, it's going to show you, right? So the channel was pretty steep. It kept pulling back and buying, right? So that's why I said we're taking out those sell zones. Every time a sell zone, a strong sell zone, never been tested before, taken out after the first test, that means we're in always in long. Bulls are observing every single sell order in those resistance zones and breaking those resistances. So that means they want new high a day. So you just cannot go against it. That's because there's some kind of a target there. So what do? Just enlarge your chart, squeeze it, look at big bird's eye view. As soon as you see these, oh, that's Rose's Wolfie wave. That's L's wedge. I can actually count the legs. So I'm going to project those targets. Sometimes you see even bigger ones. I find them on, let's see, like larger time frames. If you don't have time, like 30-minute maybe. So let me add a little bit more. You can do this on the ETH too. Let's see, 60 days. Here we go. Look at this beautiful bull channel. So market is going to sell eventually. There is some kind of a projected target there. Okay, so let's add a little bit more because I want to see that full channel. I do this for fun, and I mark these channels ahead of time. Here we go. There's a leg. Okay, one. That's a pullback. Beautiful leg. That's a pullback. Okay, so this is a complex two-legged, but this could be the final leg. And if this is the case, okay, so if I can connect from here to here, markets can start to sell and pull all the way down here, 44.30 area. Or first it can tag right, well, it kind of converses right there, or it can even come all the way down here. If the projected line, okay, here's a hint. If a projected line comes before the actual target like this, we may not pull underneath. We could actually pull here with a couple of legs and then go right back up. We could leave this behind. But there's another one right here. So for example, what if, let's see, market was, let's see. What if this was a big leg, pull back, second leg, pull back. Oh, there's this one. Say this is the big impulsive leg, first correction, second leg, second correction, final leg. Okay, so Where's my projected target? First correction, starting point, to the second correction, ending. Well, it's just about there. So eventually the market is going to pull back into this area. Maybe tomorrow, if we can finally trap the bulls. Okay, so. Or do it on ETA chart. You know, it could be a lot more cleaner maybe. So, since this is a really nice, I can see it right here. First impulse, first pullback. Second impulse, second pullback. Final, or maybe this is, generally the second pullback correction is like a shallow one. So maybe I could say 1 pullback, 2 pullback. We're still in the 5th wave or 3rd push. So this could still get above this high, which it did, but it could go way beyond that if it wants to keep pushing. This is a 30-minute chart, so it could keep going higher. Okay? See, then you would find your projected target. On the 5-minute, this is what I trade, so this is where I'm going to pay attention. I'm going to do this again. Pullback. That's cool. You see, that's a lot cleaner. Right? There you go. For the conservative, market easily pull back down to here. It really is L's wedges. L says, how does he trade? It's the same thing. When you see 3 pushes, right? So the last push starting point is where market is going to come down and bounce. But it can also break that as it's making 1 push, 2 push, 3 push, another wedge, and it can come either down to here or even test here if it wants to really accelerate. But then market gives you 1, 2, 3. So if this is your first correction, second correction ending point, you do this projected, and when the market is going up with several legs, that's where you're going to take profit. So it just goes one way, and then you say you sold into it, you took profit. Now you have a way to reverse and take profits. You could do this all day long, but you need a clean chart. You can't just load it up with a bunch of indicators and all that nonsense. Just keep it clean. So you can see the legs. Or if you want to read about it. Seeing the future is a really good one. It's all yours. When you get these last legs, they're very steep. Okay, before I look for deep pullback or sell-off, I always look for a double top opportunity and a failure to take out that high. Then it could start to sell, take out that neckline. Okay, it could come down with several legs down. It might even get down to these levels if it really wants to sell. But you have to, they trap these sellers first. That's why the first sell is never a good idea. Trader's equation, second sell. Okay, second entry is a lot better sell. That's because everybody's trapped here. They're buying, or new buyers join here, and then they trap those again, and then they sell. So it's, when the third leg is strong, or wave 1, 2 to 3, 3 to 4, and 5th is like this steep, always wait for that double top. If this high is taking out that high and closing another bull bar, that means this leg is not over. It's just a complex. It's just making new highs. Okay, so then there could be another wave 3 push wedge in here. That's why he calls it nested wedges. There could be another one like this, okay, with a projected line. But then it starts to sell. you have a huge short there, short swing. So the documents I sent you, it's like a step forward. It'll show you all sorts of examples. Step forward. It'll show you all sorts of examples. Just study the wedges in the Brooks course. You'll do fine. All right. There's not much time left. End of day. Let's see if the bears can start to bring the market down. So leg 1, pull back, leg 2, pull back. Might get a leg 3. The only problem here is that there were a lot of bears short here, so they sold higher. They want market to come down to here. It might come down here. That would make a bull flag, and it might actually close and close above the EMA today. That means tomorrow we continue higher. So be careful about the bar 60 high. That would be possibly another leg down. Maybe leg 1, pull back, leg 2, pull back, leg 3. So from here to there, projected target, that's a nested wedge. Then we could reverse from there. So we're coming down with the third one, probably. Bears already selling above the 74. They want to take out the 74 low. They want to take out the 73 low. They want to get to the EMA. Probably this is the first line they want to test. Bar 60 high. Okay. If they break it, that breakout test, this is where they're going to come down to. There will be sell stop orders one tick underneath 75, already activated. Bears want to break the 73 low. Goal is to reach at the minimum 57.25. Bulls want to keep the gap open, trap the sellers, but these guys are stuck, so they sold above. They want market to at least tag that. But if they're able to close a bear bar, they're going to accelerate and come down to here. There you go. Bears, you could do it. Just tag that EMA, close underneath. I don't trade the end of day unless there's some kind of a news. There might be some earnings scheduled, by the way. I don't have, let me see if they have this calendar. Maybe investing.com. See, it's so steep. It's trying to get back up for a double top before selling. Bulls are still trying to keep that gap open so they can close the day above the EMA. But these are looming. These bears, these bulls started to take profit. This is a pullback. We need the third leg down. So I haven't been on here for long. So where is the earnings calendar? Is there a good earnings calendar? You guys look at, oh, here, I found one. Okay. Day 17, earnings whispers. .com. Nothing really. There is one. What time is this one? There's 4:30. There's 4:15 scheduled, but I don't think we need to worry about any of these. Not a big one today. Tomorrow's Bank of America, 6:45 a.m. Charles Schwab, 8:45. Morgan Stanley, Lockheed Martin, Bank of New York. See, they're selling. They're trying to reach here. Oh, wow. Tomorrow's a big, big, big one. So maybe we get some kind of a volatility. Wednesday is jam-packed. The next couple of days is major, major names. Okay, so in 10 minutes, you should hop onto the YouTube Brooks channel, Brooks price action channel. Brad posted the link for the end of day recap. Market is still trying to get down to here, but it's a 10-point bulls, 55.75. It might bounce there, but I think it's going to continue into the 14-15 point. So the next one is 51.75, which is right here. So we're going to tag this projected line. That would be really good. If we can get that, then you would get a really nice exercise for the bear case. I like to see at least 45.53 tested. And I don't care about the projected line. They're taking, why is this jumping? It's like someone's going to say, oh, you just said that it's going to go there and it's not going there, or else what's up with that? That's because you don't know how to count. Okay? Just because this is going up, we already know why that's going up, because it is 10 points. Bears right there, taking 10 points. They actually accelerated, went beyond. You can even say, I'm going to mark from here because that's where the selling began. And here is a 10 point. So why is it jumping? I did say it's going to bounce because it's a 10 point. But eventually these profit takers will get out of the way. And if that bar closes on its midpoint, then it's going to continue to come down to the 14 point, 15 point. Since there's not much of a space there, I'm just going to take that. And that is slightly underneath the projected target. But since end of day, we might just test 13 or something like here, in between 14 or 13. And that's it. So 51.75, we might actually test at the close. But that bar is still taking profit. It just needs to close in 1 minute and 50 seconds, at least on its midpoint. Can the market sell all the way to here? If they break this projected line, your next target is going to be this. That's just, I call these overshoot. Only because selling is so strong and bears are actually breaking the projected target because they see they want to double up. So then the first correction ending point is your final target before it reverses back up. But I'm more interested in this 53 and 52 area. So there's 50 seconds for bears to do their best and foremost and close that bar in the middle. It's like bears trying to get a good target in before the close. Don't let the bulls take over and go to the high, the prior highs. So keep selling. That's profit taking right there. But we don't have a bear bar underneath the 57.25. Bears really need to push this underneath here, take out the midpoint of this doji, and then keep selling into the close. This is there. This is a legit target. It's shallow. It's not that far away. So let's see if they can actually manage to get it done before the close. You should be able to. It's not that far away. It should just accelerate and dump. Holy cow. This is great. How you guys doing over there? Everybody's so quiet. Are you quitting on me? How you guys doing? Waiting to see if this projected line actually works. I'm having a great time with my guests. $53, just tag that. 45.53 is like the minimum. We should get that. Woo! I love it when I'm right. Oh my goodness. Oh, come on. You kidding me? One tick? No. No, you need to sell. Keep selling. You're going to give me that target, and I'm going to take that target to home. You're going to give me what I need, 53, and then further down to my projected target. Yeah. No one's messing with my projected target there. Oh, yeah. I was in the trade. Of course I sold that. That's a solid target right there. That was my end of day trading. Because it came together. I don't like to trade end of days, but it's just so stupid. It's, you can't really sideline. That's it. So got my target. Thank you very much. I'm done. All right. So you should take profit there because it's going to bounce. You all have a great day. Okay. So now you can quit this live stream and go find Brad, and he'll go through the end of day trading.